What's up, guys? Hold on. I'm late. So I can do the intro today. Oh, my lights are turned off. Hold on. No intro today. What's up? What's up? Sorry, running a little late this morning. Hold on here. Actually, you know, market doesn't even open today. We're half day, so whatever. I mean, I guess we... Do we miss the intro song? I can still always play the intro song if you want. Hold up. Let's get situated here. We don't take holidays here. We don't take the day off. All right. Intro song. All right, let's go. LOL.
The charts are bold, dating bands rapping stories untold. Riding with rocket scooter AI, up we go reaching for the sky. Every trade holding never dies, on the edge as the numbers fly. Checking the charts, midnight glory, heartbeat thumping, another story. Green and red flashing voices. Kings standing on their cloud, riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies, on the edge as the number.
Lower DD band on NASDAQ. Ooh, yeah, nice.
Up we go, reaching for the sky. Every train home never dies, on the edge as the numbers fly. Checking the charts, midnight glory, heartbeat thumping, another story. Green and red flashing voices loud, future kings standing on their cloud. Checking the charts with AI, up we go reaching for the sky. Every train home never dies, on the edge as the numbers fly. Checking the charts, checking the charts, midnight glory.
Welcome, guys. Welcome, guys.
Push on through the endless last night.
Ooh, little DD band action there. You guys see that volume? No time to waste. We got DD band. Look how great this is looking. Oh, I love DD band. Let's go. I grabbed that long. Look at that volume. This is how good our stuff is, guys. Look at this. I mean, you can't argue with that. Hold on. Let's hope it holds. God, on point. You know that volume that came through? All right, hold on one second. I'm getting all my social situated here. You guys see that? That's solid. So that's what DD band is, right? All that volume that came through. I don't know if there was a news at that moment, but that's the volume you expect at DD band, right? That's pretty nice. All right. Don't break. What's up, guys? Don't forget to smash the like button. Let's go. We'll even do a giveaway today. All right, so let's double check, make sure there's nothing really going on around the rest of the globe. We had some pretty terrible news, you know, at least Fed-wise yesterday. The news is absolutely disgusting as far as rate cuts go. So hated that. Fed members becoming less and less likely to cut rates as the moments go by. It was really bad. Put some analysis out on that last night or yesterday on Twitter. New York is closed all day today, and then you get futures open till noon, I believe. Sure, got whatever's going on this week. So, guys, ooh, what I get? All right. Okay, yeah, nothing today for Juneteenth. Nothing coming out. Just jumping right into it because there's not really any market news or anything going on today. Lower DD band is always a vibe. Let me double check because I don't think I updated my charts to have. Oh, where is this? Hopefully it holds. Now S&P is not bouncing. This is Nasdaq first, and if Nasdaq fails, we got S&P underneath it, right? Which is the next one to go to. This 748 level is a key pivot. Lower DD band, you guys know the drill there, and S&P has still got a little bit of room left to go on its. Why is the market selling off? Well, the Fed just kind of delivered you a punch in the face yesterday. If you know how to read the dot plots, Fed is very much leaning onto the no rate cuts this year camp. Almost a third of the members are voting 0 cuts this year. So that's more than last time. A lot more than last time. So more and more Feds are on the camp of inflation is going to get higher. So more than half of them are that way. Most of them think we don't need any cuts at all. I'm sorry, a third of them think we don't even need any cuts at all. One second. Hold on. You do something really quick in marketplace here. Hold on. All right. What's up? Good morning, guys. All right, yes, New York is still closed because there's a new federal holiday. Since I think that's like 2021-ish. Juneteenth. Never was a holiday early on in my trading days, but hey, holidays are good because you know why? Markets closed. We could still do some trading because futures market is open. We got some technical pivots to play on, but then we also, you know, can sort of just, there's no open price. Let's just move all this over here. Just have fun with today. Move all this over here. There's no maps, there's no pockets, there's no nothing, but we do have some futures pivots to play on. We always do. Let me double check. I've got my overnight, so you guys pay attention closely. Smash the like button really quick, friends, but I'm going to give you all some numbers really quick. We're going to play off of these. I longed at the lower DD band, as you can see, up about 400 bucks already. I grabbed this in my funded account. I grabbed this in my Tradeify accounts. I grabbed this. I'm good to go. DD band is an EST setup. All right. 21,941 is way up here. We're below MHP, right? And let me make sure we didn't open below it. We opened above it and broke below it. All right, so just as the note will go, all my text notes are gone. That's okay. Let's put a new one up here. 90% a day, only 10% of days will break through and keep going. So let's. Again, there's no mechanism for the market to rally today because the stock market is closed. We're just following global markets. But I do always take a bet that we do hold DD bands right here. All right, so and the back test here, obviously, only 4% of days closed below. I'm 8%, sorry. This is a 92% close above. This is all condition back test. DD band is straight from the boot camp, you guys. Let's pick a cooler looking green that matches the green on the chart. That'll work. So right when we hit that, right when I logged in, man, that was perfect. So hopefully this keeps going. Let me find a color that more closely matches that color. That's good enough. Whatever. So where do we go from here? Let's see if we have any impact lines anywhere to play with. We just had selling. Why are we selling? What was so devastating about yesterday's Fed, right? So the Fed came in and basically dropped the bomb on everybody. And I announced it. If you guys are in my stream, you guys saw everything I was talking about. we'll kind of continue to cover this. All right, let's just move all this. This is for tomorrow. Out of the way. Out of the way, you. So everything trading today, right? This is a half day. This is actually considered Friday. So even though it's Thursday morning, whenever you have a federal holiday and the stock market is closed, futures still trade because futures are a global thing. So futures are still going strong. And God, there's so many like drawings I have on here. And this is all considered technically all of last night, all of today. We close at noon. We unpause. We actually don't close. We halt at noon. We unhalt at 5. And then we get back to rolling. All of this, including last night, is considered Friday's trading. If you open a daily candle in futures, it will say Friday. All right. Very rare you break through MHP and not close above. So hopefully we keep going. I'm up $500 here. We'll see if it keeps running. I hit that lower DD band on NASDAQ, which is kind of nice. Let's put a little note here. I'll take it. Hey, I like making money when the market's closed. You guys know how it goes. How y'all doing, friends? I didn't even do the roll call because I'm jumping in here late, but I love you guys. You know I do. Only 8% of days, and I'm gonna do a really awesome like masterclass today as well while we're chilling. Okay. Let's hang in here, and hopefully the market doesn't break structure and crash out tonight. And why was what the Fed was saying so bad? We'll talk about that in a little bit too. All right, so setups today, hopefully. Now again, if it continues to fall, S&P has an EST setup bounce off of that. So far, so good. I love grabbing these lower DD band plays. Kind of nice. I longed here. The market. Actually, I logged here. I got in here just in time. I almost didn't stream today, but you know what? We're going to use it as an educational opportunity. Can you still trade if New York is closed? Not the stocks, but you can trade. Actually, I don't know if you can trade stocks now that they're all 24-hour trading in some places, but the market, the exchange itself is closed. You can still trade futures for sure. I haven't traded stocks in a million years, so I'm not really sure if the newer mandates still allow you to trade on a holiday if the exchange is closed. The electronic trading is still open. That I don't know, but probably not. But I know there's been a push lately in the last year or so to have stocks go 24 hours no matter what, like futures. So usually in market closure days, you couldn't trade stocks. So I'm pretty sure it's still the case, but it's been so long since I have traded equities. I wouldn't know. You guys know? Can you still? No options there, right? Okay. Some stocks of the 24-hour type you can still trade, but no options. Right. Options for sure. No options. That I do not. There's all this stuff that like when the Dallas exchange opens up, supposedly, right? So they're making a Dallas stock exchange, right? To kind of be the hub for like 24-hour trading when that all comes out and opens up. So basically stocks will be a 24-hour thing, which would be insane. Futures market closes it halts half day, right? So you guys know me, I just got in long at DD band. So what did the Fed do yesterday to kind of ruin the party, right? Right immediately when the Fed stuff came out, we popped, we fell, we're sitting here, and I was like, well, rip market, this is bad. And why? And you know, why was what the Fed said bad? And maybe yeah, kind of like learning a little bit. Maybe you're newer to trading, but I'm gonna teach you guys something very cool. I'm gonna pop it up right here on the screen. Actually, I tweeted it. Let's pop it up here. Just to cover a quickie little icebreaker before we get started here. So I'm in a long trading scene right side of my screen, and I put this little tweet here. All right, so the projections come out once a quarter. This is the most important part of a Fed meeting. Don't even worry about what the decision is. If you can't predict the decision, like, you know, 9 out of 10 times, then you're not that good of a trader. The Fed's decision is so predictable. You can predict it very easily. There are tools out there that'll tell you what the prediction is, even if you can't do it. The market has a contract you can bet on called the Fed Funds Futures contract. You can actually gamble on what you think the Fed is going to be. And so traders will bet based on all available knowledge, inside information, or whatever. And so most of the time, you should be able to guess right. As a master trader, you would be guessing the Fed right. No rate cut, you'd be walking into that meeting knowing there is no cut today, and you would get it right. Most every time. I get it right every time, almost every time. I don't think I've gotten it wrong in years. Okay, so again, I know where the tools are, I know the bets are, I know the probabilities, and it's easy. I can teach you guys how to know that as well. It's not a hard skill set to do. Did I guess the Fed pivot last August? We did. We forecasted utilizing. We took a guess. Now, sometimes you're going to guess, like if the market is split, you get like a 30%, 70%. Do we get a cut or not get a cut? And we guessed right. But it's been a while. But usually the tools are there for you to guess it. It's not really hard, and Wall Street's pretty on point. Sometimes they'll be hinting, okay, we get rate cuts this year, and the time is like, when do we get it? Like right now, rate cut, it was timed to be in August, and right now I'm going to tell you it's not August anymore. And this is what's going to tell you that. And so what is dot plot? Remember this, like each little button you see on the screen here, this is a plot of year. So I'm going to write this because it's probably hard. The picture's cut off. But down here at the bottom, you can see there's 2025. I'm going to write 26. And this is just icebreaker before we get started. 27. I'm in a long trade. And then this is everything after, like greater than 27. Long term. Okay. We have a couple of things that are helping us forecast what inflation is going to be in this time frame as well. So this is what the Fed wants to do over this period of time. We also have like the Michigan numbers, which come out, right, once a month, that estimate what the 1 year inflation expectation is, and the 2 year and the 5 year, right? So we have like all these different expectations of long-term and short-term inflation effects, and Michigan numbers certainly factoring in the tariffs. We also have CPI, which is, this is the current state of inflation. Now, CPI has been trending down since COVID, but the Michigan numbers have been, ever since Trump took office, spiking up to show 7%, 6%, and now 5.5 inflation on the 1 year. While CPI is in the mid twos, and the Michigan numbers said by the end of 1 year out, we should be at 5.5. Okay, so already Michigan's saying tariffs are going to cause crazy inflation. Because of that, and the uncertainty of the tariffs, the Fed is starting to become hesitant to cut rates. They want a 2% target before they start simulating the market. They don't want to make things crazy good without 2% inflation. Michigan's saying we're way far from that. Looks like I'm up about $700 in my trade here. I'm up across the board, looking rock solid in that DD buy. I like it. This is the retrace trade. Let's see if I can get lucky to go any higher than that. Maybe to go for a second wave up. This is every single time setup. You guys do it all the time. Okay, so this is the voting members. Each little like peg here is a participating member that's voting. On the axis here, you're going to see 3, 3.5, 4, 4.5. These are the actual rate, the rate that they want, the target rate. And you can see that the dots are in between numbers, 4 to 4.25, 4.25 to 4.5. They always present the rate as like a range. So these are the range, right? This is your 4. This is 4.5, etc. Right? Even when the market's close, I'm making $6,000. Let's go. Take the retrace and just kind of have fun with that. That's the simple trade. Let me just pocket that. Why not? All right. That's fun. What's up, Kaizen? Good morning. All right. That's six G's out the door in a closed market day. All right. Okay. All right. Let's just grab 2 contracts and just spend all my accounts. This is so good. So easy. Yeah. All right. All right. Anyways, back to the lesson. This is casually popping dollars from the market. Oh, yeah. All right. So what we're looking at here, what the Fed actually did, each little dot is somebody voting on where they think it's going to be. Each one of these is the members. Powell and all of them, they're all in here. Piggy, Kashkari, they're all these folks are in here. Forget all the names of them. They're all in here. Okay. And each one of them is like, this is where I believe the rate should be at the end of 2025, end of 26, end of 27, and longer term. Now, this was where we were in March. Okay. This is what the Fed, and when the rates come out, we know what the Fed is going to say for the most part. No cut. Easy to see that. Fed fund futures are pricing in 0 change in the rate. It's the pricing of the rate. 99.9% of traders voted that no rate cut was going to happen. Nobody believed it's going to happen. So it didn't happen. And so the market just popped and then dropped and then rallied up and then sold off and is still selling off. Well, okay. Would you think that'd be good news or bad news? Well, let's figure out, right? Really what Wall Street's always doing is pricing in the future. And the reason why the market doesn't even move really until the press conference anyways is because that's when Powell's hinting at the future. They hand the mic over to like Reuters and Wall Street Journal, and freaking even Steve Leisman jumps up there and grabs the mic, asks a question, and they're like, you know, Fed's answer is what traders are like listening to. I swear all those guys have their phones on their table, they've got their Robinhood accounts open, like, so when is your next target rate cut? Okay, SPY calls. Okay, SPY calls are good. You know what I mean? I feel like that's what's going on over there. And, you know, that's very interesting because looking forward is really what the market's trying to price in. We can easily predict the now, but we can't, you know, the Fed's got a hint at the future. And so in March, we got this little dot plot here, which is telling us where, why did I change that to green? Telling us where participants think we should be. Now, the most important thing to look at is the distribution. Now, the best way to think about what the target rate's likely to be is to take where the bulk of everybody kind of is. So everyone's kind of sitting here at the 4, right? The 4-ish range. So let's kind of say most people are between 4, you know, 375 and 4.25. Let's just say 4. So in March, we thought we would have a 4% rate. Now, currently right now, we're 4.25, 4.5, right? So that is 2 rate cuts. That's where people are getting this, right? This is where we are, 4.25 to 4.5, right? So if you imagine 4, that's where people are getting that, well, 1 to 2 cuts of 5 basis points. Why 25? Well, we wouldn't be doing a drastic cut with high inflation. So while this is just maybe 5 basis points of change, the estimate is the changes are going to be very small and incremental. Historically, under these conditions, we change about a quarter each. So that's at most 1 or 2. Do we all understand this so far? We all good on that? So far, this market is closed today. Futures market is open today. We all good on that? All right. So with that being said, we can estimate the same thing. So this is where we say, and I'll just write on the site, and this is how you're going to get really good at this. This is the Fed. This is the rate. And this is, and by the way, I'm long, I'm still long on my funded futures. I haven't cut that yet. I've longed everything and closed out at the mid. I'm still long my funded futures, and I'm going to just hold it long all night. Just YOLO. Rate, and then this is number of cuts. All right. So in 2026, you can see that the bulk of everybody is about right here, right? This is kind of where the average is. And so from 4 down to 3.25 to 3.5. So let's say 3.5, which should just round up to there. So from here to there is roughly 1 point or 4 cuts. So 3 to 4 cuts total. So we could say that between now and 2026, we'd have 2 this year and 2 next year. And that's kind of where we get those numbers as traders. You people talking about like we get 2 rate cuts this year, blah, blah, blah. This is where they get it from. This is how you can determine that. You guys can rewind and watch the stream and learn it yourself. Figure out. Now this is interesting in March, and December showed the same thing. There's not really a bulk of people kind of agreeing on policy. From here, it starts to look like a snowman, like hello, or violin, or whatever. Like, what's going on? There's almost 2 camps of voters. They're kind of like split down the middle. There's half of them that like say, well, we probably shouldn't raise the rates here. And there's others that are like, yeah, we should keep lowering another point. From here to here is another point. That goes down to 3.25. So at best, most of the people think we get 1 extra rate cut this year, and the other half of people think we get 1 rate hike. Okay. So the splitting was what was concerning. And in the long term, you can see that split very easily as well. There's a group of people up here that think we shouldn't do anything after we have 2 to 3 rate cuts. There are people that think we should have more rate cuts. So the takeaway here, oh, look at this. Market pulling all the way back to DD band. Okay. Hang in there, trade. Let me delete a little bit of this. So important part, takeaway from here, is that while there's a lot of people thinking that in the 2-year time frame, we should be about there, you can see that a bulk of the people think that after a year of cuts, we need to raise rates or no changes. Or some of the people that are here think that we lower rates slowly, or that we take rate cuts this first year and then we don't cut anymore after the first year. So we're going to say that these people are basically like no cuts, right? They don't want to change anymore after the first year or two. All right, so this is what really made the market kind of freak out in December. In December, the same thing happened. When Trump got elected, that's where this came from. Before Trump got elected, this was a nice fat, juicy ball right down in here. And this was also really big down in here. If you look way back in September and stuff, it showed lower for longer, which was great. The minute Trump hit office, pretty much half of the Fed was like, well, this guy's going to bring tariffs, so inflation's high, no cuts. This is what this was. This is 100% Trump effect. Now, that's March, right? And then so the new June dot plot comes out and shows something even different. For the shorter term at this 4.5 level, you can see that there are now, if you look at the right side, 3 more participants that say no cuts. Remember, we're 4.5 now. There are 4 people in March that said no change. Now there's 7 people that say no change for 2025. This is huge. You have more and more of the Fed shifting to no change, especially here. It's probably likely that 2 people in the 1 cut camp move to the no cut camp. These 2 moved here. Now we have 2 left. So this kind of the stubborn people are being more stubborn. That's what you're seeing. But the bigger problem is not the first year. It's the second year. We had graciously, a lot of people thought 3 to 4 cuts coming through over the 2-year period. This of, 9 people is deteriorated to like 5 or fewer. As a matter of fact, this section gets really beefy as a lot of people moved up to here as well. The 2-year effective inflation is expected even to be much worse than the 1 year as far as the impact on the economy, which means that the Fed believes there's a delayed effect on the tariffs on the health of the economy and inflation. And so because of that, people actually think we're going to be even tighter year number 2. We're not even get better. Year number 2 doesn't get better. More of this kind of like, this really nice trend of this fatter, like trend down of a lot of the members thinking more and more rate cuts. You can see, I'm going to circle in red off to the right. You guys can see that this is very thin compared to this. This was beefy at 3.5 and 3. This is very light at 3.5 and 3 now. A lot of members have shifted their belief to here. So if we count the rate cuts kind of on average, instead of going to 4, 3.5, 3.25, you can see that the average here is probably 4.25. This means that we likely get 1 cut this year. The average of this, we'll just say that's right there. Here, the average is basically right up here. This is almost 4, 375 to 4. Okay. 4. So essentially what this means is now the Fed is saying 1 cut next year, to 3 cuts the year after. And then here, there's not really much of a snowman anymore. As a matter of fact, most of the low side has moved up. On the 2-year impact, the average is right about here, 3.5. Okay. This means maybe 4 at the most. So this, and of course, the long-term effect is still like the same split for the most part. So as Powell also mentioned when he was talking, he also reiterated that our long-term projections are really not changing because we don't have information that projects that far. He said something like that, which is why when Powell is talking, he's essentially like reiterating stuff in the dot plot. That's kind of where it's coming from. And his commentary about when and why they're going to do stuff is all related to this. Hello? Oh, thank you. Appreciate it. Thank you. Thank you. Very nice. Thank you. Breakfast in bed. Well, this was a turn of events. Anyways, back to this. You can see that there are fewer. Should I try one more time? Can I do one more go at it? We do have the S&P DD bands much lower as well. Almost regret not taking profit. I'm back down to flat on my funded futures. Anywho, so each year the Fed is less and less likely to cut rates. This is what we're seeing. So we may get one rate cut this year if we're likely, but the majority of people are starting to shift towards the no rate cut camp. If inflation continues to go higher and higher and higher, I expect this as we get to September, which is the next quarter dot plot, that more people will be up here if we don't get inflation down due to tariffs. So the trend is coming down to being less and less likely we get rate cuts. Do we all understand this so far? Do I trade solely off of technical analysis? No. I invented a different kind of analysis that's not technical. DD band again. Oh yeah. We basically use two different things. We have an algorithm that identifies market maker positions, so we can line ourselves up with Wall Street based on the positions and flow. And then I have other indicators that track what the stocks are doing so I can trade futures. You actually happen to stumble upon the stream of the most profitable trader on YouTube. So stay tuned. I'll teach you a little bit this session. Don't stop shouting orders at me. I'll demonstrate it when I'm done talking. So anyways, why we're selling off, which is very much important. Like this, I am demonstrating it. This is all leading up into my base of what I'm going to do, what I'm going to do. Is that the Fed is less likely to cut rates this year and next year and the year after. This is very big news for Wall Street. Wall Street hates the idea of not getting rate cuts, especially when we have quantitative tightening, which is the first time in my trading career I've seen QT. I've been in QE since the moment I started trading. So I have a, basically, I always long in DD band. This is just a statistical position that we hold above it at some point. We have the S&P DD band coming up, which I will likely also trade on. So now, while Nasdaq did fail, S&P still has one as well. So Nasdaq did give us the bump there. It looks like we're going to lose it. But second trade down inside of here. And the reason we're selling off is just because, you know, Wall Street, whenever that dot plot came out, everybody's sitting there saying, well, no rate cut. And I'm like, no. That part is predictable. I'm sitting there yelling at people, dot plot. There's fewer rate cuts coming time, you know, as time goes on. And the market just popped and dropped. So on the stream, what I said was, I feel like the dot plot is going to come out and show fewer people cutting rates or wanting to cut rates over time, and then we'll probably pop and drop. That's exactly what I said, and that's exactly what happened. So the goal of you as a trader is not only to understand how to read the stuff, but how to forecast what you think is going to happen. Why would I forecast that more Fed members, and I'll ask you guys a question, that's just the icebreaker today. Why would you forecast more Fed members are going to be most likely voting against cutting rates? That's my question to y'all. Do I rely on a single fib level? I don't use technical analysis. I don't use any fibs at all. Fibs are stupid. Nobody uses this stuff anymore. 2025. So as a general question, why would you guys project? Because this is your goal as a trader, is to project and guess, right? Why would you bet that the Fed is less likely to be cutting rates? Let's just see what you guys know about the market, and then we'll get on with analysis techniques. Take a guess. Like, your job as a trader is to get ahead of all the other idiots out there that are talking about fibs and shit. No offense. But your job is to be one step ahead of traders. That's how you become a millionaire doing this. You gotta be ahead of everybody. You gotta think ahead. You gotta think better than everyone else. Why not? Because inflation is supposed to get worse and worse and worse and worse. That's it. Right? Right. Inflation, you can forecast inflation. That's the right answer. You can forecast when inflation is likely to be. You have plenty of tools to do so. What tools do you have is the final pop quiz here. And the market's closed. We make this an educational day. I'm going to teach you guys so much today. It's going to completely make your head spin. Why would, or what tools do you have available to allow you to forecast when inflation is going to be? CPI, PPI, tweets. Yeah, tools. Like, what do you have available to you so you can actually guess what the dot plot's going to look like? So your job as a trader is to get ahead of everything. Just like I get ahead on my levels, I'll pop along at 59.77 one more time. I'll get in and get out. So while I'm waiting for that to happen, I'm going to get ahead of the price action. But why would I'm going to get ahead of the Fed too, right? So you have Michigan numbers, right? All right. So I'm going to answer your question one time. I already said it earlier. I'm going to repeat myself again. I have an algorithm that looks at market maker positions and options. I can follow the flow and I trade off of the flow. I use it. The stock market. Number one, the stock market is closed. I can't demonstrate the algorithm because the stock market is closed. Number two is we have an algorithm that looks at positional landscape of options of market makers, and we can find where action will be in the institutional side of Wall Street, so we can predict where volume will be, and then I join the volume and the flow. Example is the scalp I made earlier when I got in and got out. I longed at one of these pivots that I have here. This is based on margin requirements in futures. I took that trade, and then when we hit the lower band, I'm going to take that trade one more time. So I usually pivot off of each one of these green bands are based on margin requirements. All right. And no offense, I just timed you out for 9,999 minutes. So I'll see you at Christmas and ask a question again. All right. And the next thing I have a question for you guys is, no, obviously no, a troll, a YouTube channel that was started 2 months ago with a random name with no content, just a fake troll account. You see them all the time. Tyler, you got to get used to it. All right. So anyways, okay. I'll let you appeal the decision. You can email Matt at Rocket Scooter and let me know if you'd like me to unban you. But other than that, you're muted. Okay. Good Lordy. All right. So the tools that you guys have to actually be able to forecast the Fed is going to be the Michigan numbers, right? So that's a tool that it comes out every month. It's a forecast of what the inflation is likely to be a year out, 2 years out, 3 years out, etc. If those numbers are getting worse, it's actually factoring in the tariffs. And so you can know that that's going to push the hand of the Fed. When Michigan numbers came out, the last 2 or 3 reads, it's talking 7%, 6%, 5% inflation. The Fed wants to target 2%, so they're not going to cut rates if we're likely to be 5 and 6%. The CPI could go up 2 or 3% due to the long-term effect of the tariffs, right? Oh, that tea is good. It's like a barley tea or something. Kind of has like that rice, that Honey Smacks flavor to it, like the rice cereal or whatever. Barley cereal. Why is the stock market closed today? Because Joe Biden made Juneteenth a national holiday, like during the George Floyd stuff, as a sympathetic move, I guess, to ease tensions in the nation at the time. So now Juneteenth is a federal holiday where banks and the stock market are closed. But it's great because it's good to have a celebration. Obviously, I love holidays, and so that's kind of the reason they did that right around that time. And it's kind of a cool thing to have a holiday middle of the week. But I hate holidays in the middle of the week because I like trading and I hate when the market's closed. I hate bank holidays. I know. We should give you like a federal recognized day. I hate holidays in general as a trader because the stock market's closed and I like making money. But it's cool to have a holiday. You know, Juneteenth is a great holiday to have. It's a great celebration. Obviously, it's important to our country and it's cool. You know, but can't we have the stock market be open more days in the year? Damn it. Today I can't. I mean, I did make a trade, but I wish I could have like more trading, right? Whatever. Took long, blew your funded account. Wait, what do you mean you took a long and blew your funded account? How are the markets moving 7 points of range? Are you able to take to blow an account with such small movement? Question. All holidays should be on a Monday or Friday. I mean, I like that idea, bro. And I think honestly, I'm such a trading nerd. I think all holidays should be on a Saturday. Don't close my market. Dang it. It's that flexible Christmas, man. All right, so here's my strategy and setup, guys. I'm gonna give you guys some tools here. All right, I'll unban that person that was talking earlier. I just don't like when somebody says, hey, read my question. Hey, read my question. Hey, read my question. After the third or fourth time, I'm gonna be like, all right, look, calm down. Okay. Asking about fibs and stuff. Obviously a troll, not real. Okay, so first thing I do here, and this is the first thing we do, Rocket Scooter, I'll teach you guys something really cool. And Tyler, I'll give you my best moderator to help you with your troll situation if you ever get them. Because Tyler, you're gonna be huge. Tyler's gonna be a huge streamer one day. We know it. I knew him before he was famous. Okay. Let's go down here. So liquidity maps number 1, bull and bear setups number 2. Let's actually talk commitment traders today, number 3. And then we'll do a couple more things. I'm gonna teach you guys trader funding masterclass. I'm gonna completely blow your minds today with some cool shit. All right, DD bands number 4, which is the trade I'm about to take. We'll take a look at that in a second. Hold up. All right. All right. Oh, here we go. All right. Now lower DD band on S&P. Can we take it? All right. Let's grab something here. Let's just play with it a little bit. That's some good juicy move here. Let's tap it with 1. Try one more time. Bum, 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 bum. All right, let's go. All right, we're setting it up, setting pretty lower band. Okay. All right. Gotta love this. Yeah, so like, why are we selling off, right? And again, nobody don't talk about Israel and Iran. That's not why. The reason I talk about the Fed all morning, we're selling off because the Fed, that dot plot, in case the moral of the story, just before I go on to the next topic, the moral of the story is this is fucking bad. This is so bad. This is horrible news. Chart A and Chart B show a devastatingly drastic shift in Fed's perception of the market. This is why we're selling off. Delayed response to Fed. This is garbage. The dot plot came out as a, oh my God, we're fucked. Yeah. So, all right. So a lot of people saying bombs are flying Iran, this and that. No. This is delayed response to the Fed. And after, like, basically in my stream yesterday, when the dot plot came out, I was like, well, rip market. That's what I said. I go, oh man, boy, Wall Street's gonna love this. I was like, I think I did this or something. I think I was like saluting the market. But anyways, yeah, this is why we're selling. It's delayed response to the Fed plus stock market's closed, which is bad. But anyways, long and DD band every single time. Now let's talk about that. There's a technique that I created that uses margin requirements to predict high volume pivots. It's so clean and so accurate. In fact, you can predict high volume at these green bands. Here's the one in NASDAQ earlier. This is where I made $6,000 right out the door. Well, actually, I closed out this flat. It's actually made 4,000. I longed right here to rally to there. High volume pivot at exactly this line. This line is calculated last night, actually, and it's based on margin requirements. That's the one in NASDAQ. You can predict high volume. Here's the one in S&P. You can predict high volume. How about knowing that, 16 hours in advance, you can predict high volume pivots just using margin requirements? May not be something you knew you can do, but that's one of the techniques we have at Rocket Scooter. As a matter of fact, it's so good. 100% of the time, it will predict a volume spike when you touch it. It's very rare for somebody to have an indicator to say 100% of the time. I guarantee 100% of the time, this volume will appear here at 100% of the time. It's a mechanical exploit of the Globex. What's going on here is something very neat, and I derived this from margin requirements. This number is published automatically in our platform in this table once a night, and we actually wrote a program that scrapes the CME website for the data to create this information every night it updates. So about 15 to 30 minutes before market opens in the overnight, put these bands on the platform, and they're high volume pivots. Now, on the S&P, which is what our backtest is from, I'll have a little handout here for you guys to read. So this is why I'm going to take along here. And again, the market's crashing out and I might be catching a falling knife, but it's always worth a trade because statistically it works. So I'm going to take it small, just with one, but we'll see what happens. At this lower band right here, I will long every single time, no matter what. I have a ratio that I use that's telling me if the stocks are bullish or bearish, but we don't get that today because stock market's closed. A little dash is up here, top left of my screen. Don't have that ratio. We don't know. But the stocks are, if that ratio is greater than half, the market's more bullish than bearish. I'm going to hit it with a normal size. There's my bigger size position. If it's not greater than half, I'm going to hit with my smaller position. Since I don't really have the data to go by, I'm going to assume it's greater than half because it was much greater than half yesterday, but we don't know. So instead, I'm going to trade it small-ish and just kind of take it easy. We pivot off that band roughly only 8% of days historically close below that band. It's pretty fantastic how that works. And I'll show you a little example of this tool over here. It's really, really, really neat. I'm going to open Thinkorswim. And margin requirements, they set a range, a buffer range around where futures can move, where, it's basically based on where positions are distributed in the futures markets and where risk is to institutional hedge funds and such that are holding futures contracts. And the exchange takes data from everybody's reportable positions every day, and then they analyze what the margin requirements should be. If the market's likely like wider range or more volatile, margin requirements go up, less volatile, they go down. Pretty simple like that. And by guys, those of you that tuning in, don't forget to like the stream. We get close to 1,000, I'll give away a funded Tradeify account, maybe two. So my name's Matt. I'm a live futures trader. I am the CEO of the Rocket Scooter platform. I run a company called Rocket Place, which is a house for thousands of vendors who sell, like Discords and trading courses and stuff. I created the trading platform on your screen. I invented the technique I'm about to talk about. One of the pioneers in the field of gamma exposure in Wall Street, chemical engineer by degree, and I'm a live futures trader on YouTube. Welcome. Nice coming on over here. I am live. I am a real money futures trader. I recently got into prop firms earlier in the year, for the most part, just because of the sheer popularity of you guys using them. I've always trading my own money for the last 15 years, but I recently got into prop firms because it seemed like a cool little challenge for me to try to get into, what you guys are doing and get the live accounts. I don't care about the payouts. I want to go live. When you're doing a prop firm, you trade through the sim account, then you go to sim fund and you get paid. Then you go to live and you get a real brokerage account. Live is the final destination of a prop trader. It's very hard to achieve, right? Everybody wants to go live because it's better. There's fewer rules and the taxes are better. Everyone wants to go live, right? So I told myself in 2025, I'm going to go live in every major prop firm as a challenge. It's very hard to do so. It's even much harder than real trading because all the rules they give you and stuff. So I managed to go live with 2 prop firms, which is basically reserved for the best of the best of the best traders who do the best in these firms. I've gone live with Elite Trader Funding, and I've gone live with My Funded Futures. I'm about to go live with Tradeify to get the 3. And then after that, I'll probably go for Top Step and whatever. I'm just collecting them like they're Pokemon, baby. And I won a trading I won a big futures trading contest, and then I peaked top 5 in the Robins last year, all kind of stuff. Yeah. I've done a lot of cool stuff as a trader, but mostly I share my trades and share my performance with you guys. I'm one of the few traders out there that you might see that does have an edge in the market. I actually trade roughly 70 to 80% win rate. I publish those stats on a daily basis. I've been trading a series of Tradeify accounts, upwards from 0 profit to now sitting at roughly 144,000 profit with them. Now I'm just inching toward payouts to milk the system to go live, and that's where I am right now. I peaked top 5 in the Robins, and then I got bumped down to like 6th or 7th, and then I just quit. Robins Cup is an absolute joke of a contest. That's why I didn't want to waste my time all year. I got the top 5 in 3 trades. Robins Cup is like basically 50 people enter. They're a bunch of no names, not really big traders enter. The commissions are ridiculous. Upwards of 40% if you trade micros of your entire trade is taken away as a commission, and fees. They're abnormal fees. And you put in $10,000, and there's people out there that are like, I'm up 40%. I'm top 5 in the world. And you're like, so you turned 10,000 into 14,000 and now you're the top 5 trader in the world. It's an absolute joke of contest. So I entered it because back in the day, there was a bunch of gurus online. There was one in particular, some like, I don't know, some small time ninja trader dude was out there like poking all the big traders, enter, I'm going to beat you, enter, I'm going to beat you. And I'm like, actually, I'm the best trader. I'll jump in and play with you guys too. Friendly competition. I'm friends with all the major streamers, me and, I know Matt, I know ICT, I know all these guys, like we're all buddies. And I was like, you guys want to enter for fun? It'd be great publicity for all of us. And everybody's like, yeah, let's all do it. And then we all organized to just enter the contest together. And all these big streamers out there were like yelling at each other to enter, like, I'm going to beat you, I'm going to beat you. And so I was like, okay, I'll enter. It'll be fun. And it turns out months into the contest, we figured out basically nobody entered. Trace and Matt entered, I entered, and actually ICT entered. We're the only 3 of the 25 people screaming at each other to enter to actually put up and show up. And one by one, each of us dropped out because the contest was stupid. We were actually there just to beat everyone else, to have fun and have a good friendly competition, like who's the best streamer. And then like nobody showed up. Found everybody was lying just for publicity. So then we were like, well, screw this. Matt even made a video about how dumb the Robins was and how much money he was losing to commissions. Matt was trading basically flat, but then losing money because the commissions were so high. And then I called him. We were talking one day. He's like, yeah, he's like, I'm probably going to drop out. This competition's dumb. I was like, I'm only in it because you're still in it. And I'm like, I told him, I go, if you drop out, I'm probably going to drop out too. This is a waste of our year. I'm going to babysit a $10,000 account and for bragging rights. Nobody's really trading. We found out how easy it was to get on leaderboard. I got on leaderboard in 3 trades. And I was like, really? And then there's people out there right now on Twitter, and there's a bunch of people like, look, I'm first in the Robins, buy my course and I'm like, oh, so you turn 10,000 into $20,000. I can do that in 10 minutes. Like flip a coin the right way, and now you're the #1 trader in the world. So, who is Matt? Trades with Matt. Sorry, y'all don't know Trades with Matt? He's huge. He's the other Matt. Yeah. So anyways, yeah, we both entered it, and then we were just both like, this is kind of dumb, because we wanted to go out there just for fun. Like we're both very, honest and open traders. And we were like, let's do it just to see how good we place against everyone else. That's kind of what my thought was. Let me see if I'm the best YouTuber or whatever. And I thought it was gonna be a fun, friendly contest, and just turns out that everyone else out there was too scared to enter. So okay. And then yeah, there's like 20 other Matts actually. Matt showed the commissions are too expensive. Yeah, he did. And we were complaining the whole time. Every trade that you make with minis, you would lose roughly 25% of your gain to commission. If it was micro, it was roughly 40. Robins tacked a commission and an API fee on top of it. That was like a second commission. The API fee was for their weird copy trade service that they used to track the results of the contest. And I even called Joel Robbins himself. I'm like, why do I have all these extra fees? This is ridiculous. He's like, I don't really know what that fee is. I'm like, what do you mean? This is your brokerage. You don't know what your fee is? He's like, well, let me check with my tech team. Even, I swear to God, I'm not lying to you. Even Joel Robbins on the phone didn't even know what the fee was. The fee wasn't outlined in the contract either. It just had like this other fees. It's like, we can possibly charge you this, and other fees. And I'm like, okay, so it's in the other fees category. Turns out it's the API they use, and they have this copy trading service they do over there, which is the reason they have the contest to begin with. They take their winners and they pitch a service to you to join. Hey, people can subscribe to you, and essentially they can invest in your trade or invest money, and then it just automatically copies your trade in their account. So they can make a portfolio of traders. There's so many services like that out there. That's the real reason for the contest, to find gurus to pump into this service. The whole thing is a design for that. Anyway, it's not talking bad about them, but it's not just a contest for the sake of who's the better trader. It's a contest to funnel gurus into this leadership service people do copy trading of. So anyways, Matt was kind of like, this is dumb. And I was like, yeah, this is dumb. And we were just both like, well, he's like, I'm still in it because you're in it. I'm like, oh, I'm still in it because you're in it. And we're just like, whatever. He's like, I'm probably going to quit. I was like, yeah, me too. This is dumb. And so I didn't want to babysit a 10K account for a year for bragging rights against a bunch of no-name traders. I'm like, oh, so we pulled out. Anyways, yeah, so that's the real story about that. I should design your own legit Robin's Cup. I did have a conversation with EdgeClear a long time ago, like maybe a year or two ago, about this very thing, to see if EdgeClear would back a global trading contest sponsored by Rocket Scooter, where you're only allowed to have one account per social security number and all that. And EdgeClear said 100% we were on board with that. And so first person I called was Matt and said, hey, would you like to co-host a global trading competition? And he's like, maybe. He's like, I'm designing a trading platform and I'm kind of working on this. And that was a couple of years ago. And my thought is, once Matt's finished with all his stuff, that we can probably co-host a better version of the Robins. So maybe so. Yeah, Tradester. So it'd be kind of fun, like to actually have a legitimate, honest trading competition, you know, like without crazy scams and fees and bullshit. And EdgeClear already said they would sponsor it. So we got broker backing to do that. We just need to organize and design it, but both him and I were busy, so we didn't actually sit around and do it. We just kind of chit-chatted about it. And we met earlier earlier in the summer. We hung out a little bit and chatted about it a little bit. But Maddie's a busy boy. Me too. But that'd be kind of kick-ass, right? All right. Anyways. Alrighty. Yeah, we'll do giveaway in about 30 minutes. We'll do a funded account giveaway. Make the trading competition only 3 weeks or something. A year is a waste of a year. Yeah, a year is too much. It needs to be a quarter or less. That's exactly what I think. A year is just hard, right, to commit to. A quarter would be awesome. A month would be fantastic, right? Yeah. Monthly hedge PSI. Okay. So back to what we were talking about, the DD bands, right? So this is based on margin requirements. And margin requirements are pretty cool because they actually tell you expected ranges in futures. You may not have known this, but what are margin requirements in futures? And by the way, I'm longing at this lower band. 92% of days do close above this band on our back test. Sorry, that side conversation about Robins. Let me show you this right here. I'm going to put a Thinkorswim version of this indicator on here and show you how great it is at predicting volume. This is what it actually does. 59. It's a volume prediction tool, and there's some mechanics in place that allow the market to forecast where that expected risk is for traders based on reported positions. And I'll give you an example of what these words mean that I'm saying. So inside of these bands, which are drawn right here, simply just based on margin requirements, you can see that there's something really neat and magical about this exact limit. Can we all basically agree there's some pivoting action there, right? Just so far, we all have to be on the same page for telling you the story. Markets having some kind of support there, right? Here's today, some kind of support there. The Nasdaq was there. There's some kind of mechanism going on here that's making us have some volume at these lower pivots. Even this day, the market's playing around, bounce, 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 right? You guys can see it's pretty crazy. And what's going on there, right? There's something must be happening. It's a very important number. And what is it and what's it derived from? And here, like here, same thing, market crashes out, holds and supports. Right here, predictable high volume. This is one thing I'll teach you about what we do at Rocket Scooter. We're one of the few people in the world that doesn't do technical analysis anymore. We don't do candles. I don't do time frames. I don't do any kind of candle patterns, chart patterns, overlay indicators, nothing. I do all of that out. I only trade where volume is going to be. We started the volume prediction movement almost about a decade ago. And volume prediction is one of the better things you can learn in trading. Predicting where volume is going to be is predicting where traders are going to be. And it's better to do that than use price action to try to predict the stock market's direction. Because price action makes one fundamental flaw in its assumption. Price action is basically, and that's not terrible, it's just what we do is better. Price action is going to include things like candles, candle shapes, you know, your ICT stuff is price action. It's not terrible. It's good. It can identify momentum, gaps and such. It can identify direction pretty well. It's good, but it's not the complete picture. Price action would include candles, candle shapes, any kind of bars, Renko bars, whatever, any kind of overlay, moving averages, MACDs, all of that requires price as part of the input. And what price actually is, what the assumption is price action is utilizing time and price history to try to forecast future price activity. So what you're basically saying with price action makes a fundamental flaw in its assumption is that past price can predict future price. It makes the assumption that price is predictable. And so whether you believe that's the case or not, let's make another assumption. You can build a foundation on predict. I don't even know how to spell anything today. You can build a whole entire trading strategy off of price prediction. It's not terrible. Like I said, it's good. Tons of my friends, including Tyler and Chad, ICT traders, very, very, very good at trading. Brian, ICT trader, very good at trading, right? Now, it doesn't mean that it's predicting the market. They're just stellar traders. They can identify something and make a move, and that's okay because we do that in any way, shape, or form. We're always doing that. But the fundamental flaw is that price can be predicted, or that the candles of the past contain additional information that when you derive a new equation, like an indicator, somehow you unpackage that information, and it's got some hidden information in there that tells you, by the way, this is going to happen in the future. The assumption is that price can predict future price. And the counter to that is such that if I sold 1 million shares right here and I made the market sell off and I'm the reason it sold off here, if we return to this level, was my action going to imply future action of myself? Well, no, I already sold. I'm not selling again. Does my action imply that other people will sell where I sold? Maybe. Doesn't mean that just because I sold, does that mean you guys are all going to sell? Probably not. So it's hit or miss, which isn't bad in trading because trading's kind of unpredictable, right? So hit or miss is still not a bad trading strategy. It's still good if you know how to behave. Price action can identify momentum and the trend very well, but it can't predict the future. And you can believe that or not believe it. It's totally okay. Everyone has a different trading style. But what's neat about prediction is that you want something to happen every single time when you predict it. And volume is actually predictable. That's different. Volume doesn't require any history of candles, and volume action is, so price prediction is what price action, which will be indicators, MACDs, moving averages, harmonics, Elliott waves, ICT, all that's price action trading. Volume prediction is kind of the new wave. And what it does, it goes hand in hand. It's not like you can use both. The price action trading is absolutely enhanced by volume prediction. It's the complete picture of the market because what it actually does is that it assumes that price is random. That's the starting point. Price random. Price can't be predicted. So whichever camp that you're in, it doesn't matter. They're both good. The idea is what's your base assumption? Price action is just random. Okay, well, great. Our system starts with that as the basis of everything we do. That's kind of cool because we built our castle on top of the ground that says price is actually random. So what else you got? It's got to be something else out there. Price prediction says there's some structure in the candles. We can forecast something from the candles. And together, it's a utopia of information. You put the two together, it's a perfect system. I mean, perfect. Like, because what's different is that volume can be predicted in certain instances without fail. The indicator, the green line on the screen, did you know, has a 100% success rate? 100%. You ever heard of an indicator say 100%? 100% probable. It has never failed once in the time period I've been using it at predicting volume. there will be volume at this green line every single time. So the idea is, okay, what can we do from that? Do you guys like the idea? Let's start from here. Do you like the idea that something can be 100%? We can't predict if market's going up, going down, people are going to buy, people are going to sell. You can't predict what anyone's going to do, but you can predict volume. So far as a baseline, do you think that's something that's worth it, right? Pretend like you're like me and you're like, oh, I found out a way to forecast where volume will be, right? The giveaway, we'll do the giveaway in exactly 30 minutes. Okay, 30 minutes. So far so good, right? Are we at the same place here? Would you guys like the understanding, right, that if you can at least predict volume, you're starting somewhere? Prediction means repeatability, which means you can do the same thing every time, which is kind of what you want, right? You want a repeatable thing that you can exploit. The question is that even useful information? You can predict volume all the time. An example is if SPY has 500 as a level and we're trading below 500 and all of a sudden 500 goes in the money, you're going to see a lot of volume just from that because it's a psychological number. There's probably calls that just got thrown into the money. Lots of hedging will show up and certain strikes might just have volume. So the question is that even useful to a trader, right? Maybe it's a cool bar trick to say, look, I can predict a volume spike. But it took me on this journey 10 years ago, especially when I started creating this trading platform, is that volume is predictable to a degree. And if you come to the stream every day, you will see that's predictable. The market's selling, and I caught the dip right here, just buying at my predictable volume level. It doesn't mean I can guess the direction of the market, but that doesn't really matter because in the volume prediction world, the idea is can I just predict where traders will be? That's all that matters, because if I want a long or want a short, don't I want to get in the trade and I want to get in first so that other people come in behind me? Whether I win the fight or lose the fight, it doesn't matter, but at least I'm taking my gun and marching to the right battlefield and fighting where the battle is going to be. So whether I'm right or wrong, it doesn't matter, because at least I'm right or wrong from the right place. Okay, so let's start in that particular understanding. It doesn't matter if you're right or wrong in the market because price is random. You're going to get it right or wrong half the time. But most of the time you lose as a trader is because you get it wrong from the wrong place. You longed here or you longed here instead of longing here. The better chance of you getting your random price action you want is going to be acting where traders are going to be. So I want everybody to kind of write this in chat. The reason or point of volume prediction is so that you can be wrong at the right place. Do we understand? This is crucial and key for risk management. I want everybody to say you understand. You want to be wrong from the right place. Here, you're wrong not only on direction, but you're long from the wrong place. There was no traders with you to back up your trade, right? So the idea was birthed from me of at least I can be right or wrong from the right place. And that was very important to acting on the market. Give me 1 second. I'm going to get some water. I'll be right back. You guys pause on that thought. So now with volume prediction, I can isolate just a certain portion of the chart that's meaningful to trade on. I don't have to trade everywhere. The market's falling. I'm not in that, oh, let me jump in on this. The market's falling. I can say, aha, well, maybe it falls to here and I can take my long from here. Imagine all night as the market's doing this and I'm avoiding and I'm avoiding and I'm avoiding. I finally strike right here and I'm up 300 bucks. Whether I'm right or wrong, I didn't long here, I didn't long here, I didn't long here. I didn't touch it at all. As a matter of fact, I made 6,000 longing from here to here on NASDAQ's high volume pivot. And then I lost 2,000 on one of the accounts, or 1,500 on one of the accounts. And then now we're here, I'm longing all over again. And now I'm currently up My open positions are currently up another 3 grand. Longing off of here. Whether I got the direction right or wrong, it doesn't matter because I definitely got the direction right enough. Even though I lost, I didn't trade at the wrong spot. And that's where I was like, oh my God, this is huge. How can we find ways to predict volume? And the original idea came from me. The green line is one of 15 tools that I had for volume prediction. It's actually, now margin requirements are something published by the CME group. Margin requirements are based on distributed positions of institutional traders that report. An example is if the market were just kind of like moving along, futures market's just kind of moving along overnight when the stock market is closed. And then when the stock market opens, stocks start trading. And the futures market is trying to guess where the stock market's going to open or close at. But if you can think of the futures market as something that's tracking stocks, stocks are going to move down and the futures are going to move down with it. There's kind of like a spring that connects the two together. If somehow people are starting to buy NVIDIA and NVIDIA starts to rally, well, NASDAQ will start to rally with it, right? Now, at some point, futures may move one direction, stocks may move another. And that's something we also exploit here is the idea that that rubber band is, or that spring is stretched really hard, that at some point, when that selling pressure, that buying pressure deteriorates, they snap back into each other. That's called arbitrage. That's the second thing we exploit. So the idea is that you can utilize 2 sets of tools. Number one is volume prediction, which is utilizing the fact that you can predict where traders are going to be based on many of these things. Number one is the futures market is not going to just randomly sell off too far because the stock market is closed. It's designed to track the stock market. Well, the stock market is closed. So why would futures break its limited structure when the stocks aren't even moving to go with it? What is this even being based on? Well, global markets right now. But so the idea is, why would I bet long here is I'm just betting that the market doesn't lose structure and crash. As a matter of fact, 8% of days will close below this green line. And when that happens, it's pretty devastating. And let me show you some examples of that. So why would I care, or say, why would I bet that somehow the market's crashing when the stocks aren't even open? So we fall to a lower limit where there's going to be volume. Let me bet that the market just doesn't crash. That's why I'm long. It's a bet that market just doesn't crash. It just seems to be a pretty good bet. I park along at the limit. If I'm right big. If I'm wrong small. That is the theme of a successful day trader, to be right big and to be wrong small. Now, you can keep going back in history. You can see that this band is very solid pivot. Actually, let me put a 5-minute chart and make this bigger for you guys to see it. How I came up with this idea is very cool. And I'm just going to share with you. Once you see it, you can't really unsee it. But let me go ahead and draw something really neat for you guys and tell you a little history of this. If I go into my table here and I go to S&P and I give you the number 59. Okay, I'm going to go to Thinkorswim and I'm going to draw a little box of distance 59. Again, this is just derived from margin requirements. And this whole technique is just one of 15 techniques we have. Okay. And they're all volume prediction. So this is a box of distance 59. And there's something really, really, really cool about this distance. Now I'm going to take this distance and kind of shop it all over this chart. And once you see it, you're going to have a hard time unseeing the undeniable structure based on what the margin requirements tell you the distance is. Your straight run moves on news events or sell-offs tend to be that distance. The market tends to consolidate volatility inside of that distance. It gets very cool. And I'm randomly throwing this on the chart and I'm going to show you the legs of these moves tend to be that distance. It's really, really, really clean about how far the futures market nosedives or moves in a sudden kind of movement. Here's that distance there. Here's that distance there. That's kind of neat. There's that distance there. Shit, let's keep doing it. There's one there. There's one there. I can keep going. I'm just going back on the chart and I can do this all day long. There's some kind of interesting structure, right? That just, you never really kind of notice. It's about that distance, right? You can just keep going and going and going. The market moves in waves of that distance. And that's the margin requirements tell you this information. It's pretty cool. And CME derives the margin requirements based on the distributed risk of people's positions in the market. And you can keep doing this over and over and over again. And all these little dips and rips are pretty much that distance. And I'm just going to keep going, but I'm sure you guys believe me now. I mean, you can see that there's some kind of interesting thing. It's almost like a spring will move that distance and futures will suddenly collapse into the stocks they're tracking along that distance, right? So like, you know, where did all this information come from? I'm a guy that's read every single patent that the CME Group's ever put out, by the way. This was great reading material, you know, a decade ago. I am that math nerd that did that for you guys. And again, like I said, once you see this, you really can't unsee it, but it's an undeniable truth that there's some kind of structure movement in there. And again, you can still, I don't know, wherever I was on the chart there. Let's grab on the box and pull it forward. And what is the margin requirement? It's the amount of money that the CME Group makes clearing firms charge for you to be in a trade. You might get like $500 commissions or something from your broker, but your broker's ponying up the rest of the 20 grand the CME Group says that clearing needs to have to trade their products. It's basically like how much you need to bring to the table to trade. And whether you are, you know, it doesn't matter how much your broker charges you, clearing is going to require that amount of deposit into, that's what the performance bond is written against, the debt that's there from the money you borrow and the risk of people not ponying up for that trade. So anyways, here's the same distance, you know, there it is there. And of course they're playing it here. The idea was that every single night, big institutions report their positions to the exchange. They say, well, I'm here with this amount. And somebody's like, well, I'm short here with this amount. Somebody's like, well, I'm long here with this amount. And I'm long here and I'm long here. And somebody says, I'm short here and I'm short here. And that risk is distributed all over the place. And when the longs and shorts are like really close to each other, margin requirements go down. Well, why? Because it's kind of like being packed in. If you imagine standing on a sheet of glass, right? You're going to stand on a sheet of glass, and if you jump up and down, it's probably going to break, especially if the glass panels are like a foot apart from each other, right? But if you take those glass panels and you set them directly on top of each other and you jump up and down, the same amount of them, you're probably not going to break through it. The additional positions below the current position can buffer the pressure from the force of you jumping up and down. And the idea comes down to, if people are more spread out, the risk of the same amount of volume or pressure, like you jumping up and down on glass, say that you have a tiny little bit of position here, then everybody else is scattered here, and someone sold 10,000 shares, it's very likely to press through a tiny sheet of glass. But if there's a lot of liquidity or a lot of buyers right inside of here, then that same 1,000 shares will likely get absorbed by everyone else. Kind of a simple thought, right? And so because of that, oh, should I take some profit? Should I? Hold up. Just on that retrace trade. Take profit here real quick. Okay. Sure. Let's take profit and continue to finish chit-chatting. Alrighty. That's good. Let me show you guys my P&L on this really quick. I'm not going to capture a screenshot from it, but I did go $1,500 down on that, on the my funded. Let me just grab this one. Oh, let me get it in the screenshot. Hold on. Yeah, I can get it in there. Hold up. I'm just going to screenshot everything. I just flatten everything out now just to do it. I have max positions I can make because I'm trying consistency on some of these. All right. So I'm in no position right now, but this is these are all my DOMs. So this is the my funded that went down. Everything else went up. That's just longing off of this technique I'm teaching you guys right now. Let me just put it somewhere on the chart so y'all can see it. There we go. My funded futures has a daily loss limit on their funded account. So on the live account. So I hit daily loss limit on that. That's on the NASDAQ one. I was actually up $1,000 and then I just hit the DLL and I closed out. I could have stabbed it there, but whatevs. Okay. Now, again, the idea is that when people are more compact, the market's more liquid. And so when people are less compact, the CME group goes, okay, let's raise the margin requirements. Let's make it more expensive to trade this. That way there's fewer people trading. If on a normal day, if a contract costs $10,000 and it's somebody's trying to sell $10,000 worth of it, or say if a contract worth $10,000 and somebody has 20 grand, they can sell 2 contracts into that very thin sheet of glass. But the CME doubles the margin requirements to 20 grand and someone has 20, they can only sell 1 into that thin plate of glass. The chances of breaking through the glass go down because you have fewer contracts being bombarded against the glass. The idea is that higher margin requirement means less contracts in circulation. So the market tends to be able to be throttling the amount of buying and selling based on the margin requirements. Basically, if margin requirements go up, this range that I showed you earlier goes up. Margin requirements go down, it goes down. Think of the range as basically about how far buyers and sellers are spread from each other, which is very important because if the futures were just kind of running around here and all of a sudden the Fed news comes out and it's really bad and futures were to just nosedive, well, they don't just nosedive anywhere. They nosedive to about the distance of where that margin requirement tells you buyers and sellers are spread out. If buyers and sellers are like, we're kind of spread out like 60 points of risk, then that margin requirement becomes such that when the algorithms are trying to find buyers, they'll jump that distance to look for them because we already told people we're positioning into this event spaced out around 60 points, give or take. The glass is a big space of that much. So then they make the margin requirements such as that. So when you have events, which really neat, the market tends to just, where's Fed Day? Play inside of that range or less. So the volatility of searching for buyers quickly and sellers quickly as the futures market just runs to the next liquidity point, because that's the only reason prices move like that, is looking for liquidity. Well, if the reported positions told the exchange, this is where we are, the exchange goes, oh, there's buyers here and sellers there. Okay, that's the liquidity. So the algorithms know that as well. So if the algorithms need to quickly raise the price, they'll raise the price that 60 points because that's about and test to see are there sellers here because that's where we told them we were. So does this make sense to everybody? We tell the CME group where we're spread out. The CME group says, okay, let's throttle the amount of contracts that are trading. And all of a sudden a big news event comes and futures got to move very quickly. Where do we move it to? Well, we already told it yesterday. We're about 60 points apart. So let's move there and see if there's buyers. Let's move there and see if there's sellers. And then it was like, okay, it dawned on me that we can create an indicator from that. And the risk interval, which is what this is born. And our algorithm updates that once a day in the platform when the CME group's updates of margin requirements come out. We basically scrape the website with the bot and use that information, derive the information. So the idea that futures can move a certain distance when the stock market is closed or move a certain distance when it needs to reprice rapidly before the stocks can catch up, it's guessing where the stocks will be. So in the overnight, we're also guessing where the stocks will be. It's just on a slower time frame. Imagine that when the Fed comes out, we burp up and down 60 points. But imagine before the stock market's even open, we also burp down 60 points from yesterday's liquid spot at the close. Why is it liquid? Well, you have high volume at the close. So what we did was we took that same closing print and we measured the distance up or down based on the margin requirement. And now it gives us a range at which when the stock market is closed, the futures market can span a distance and there's likely to be some kind of thing that yanks it up higher. Well, that's that spring I was talking about. The futures are still pinned to the stock market. The stock market is not open. So futures aren't likely going to trade so small or trade so low when the stock market is closed that the spring snaps and breaks and futures start crashing without the stocks that it's tracking to go with it. The futures tend to be pegged to the stocks and oscillate around the stock price the distance of that spring. It is something that's kind of understood. If you go read all the patents, you can derive that same thought. But that's exactly what we're doing. I'm betting that the futures market doesn't fall apart because the stocks aren't even open. And so why is there volume here? Because other smart genius traders around the world have read the same fucking patent. And they understand that. Big giant hedge funds and institutions know that that's a limit to price, and they're also making the same bet there that I am. Doesn't mean that it has to go or doesn't have to go, but that's why people are trading there, because they understand the futures won't deviate too far from a closed stock market. We called it the DD band as a nod to the secret project that we were doing when our team got together and built this. It stood for Doomsday. It was just a sticky name. What it really is a risk interval band, and we almost called it RIB, but DD sounded cooler, I guess, until Diddy got in trouble. Now people jokingly call them Diddy bands, but DD is the word for it, which stands for Project Doomsday, which was the cool little project name we gave to the year-long study that we did when we made this thing. Other smart genius traders. You know, in Wall Street, you can't be humble. You like the Diddy bands? The McRib band? Yeah. So anyways, but yeah, other people out there that have figured out that you can predict volume are also making the trade. Also, other dealers, market makers and such are buffering that because they understand each other participant likely is trading there as well. They're trying to prevent the spring from breaking. You don't want futures to deviate too far from the stock market, because what happens if it does is the market absolutely falls apart. Let me show you what happens when it breaks, okay? Here's that day that we sold off at 7 o'clock. This was Iran, Israel stuff. You guys remember that, right? Let me show you exactly what happens when the market gets. It's kind of like a point where the market's trying to hold on, right? And yeah, I'm humble in real life, but on YouTube, I'm not humble at all. Do you guys notice something interesting about, let's talk about volatility really quick. Volatility is the absence of liquidity will create volatility. Volatility is like how much the market moves up and down. All right, guys, we're going to do a giveaway in about 15 minutes. So I'll tell you guys how to enter that in just a little bit. At 1,000 viewers, I'm going to give away a funded account. Actually, I'm going to give away 2. We get 33 more people in here. I'll give away 2 accounts, 2 funded traders with Tradeify. How's that sound? All right. What do you guys notice different here about the volatility? You guys notice the market's trucking along like this? And let me get a different color. It's easy to see. This is something that's very interesting to see as well. What do you guys notice about the volatility? Like how much up and down we're doing, versus when you break through this band. Do you guys notice anything different? Anything different about this versus this? Kind of easy to see, right? Just price action alone. Bigger volatility, right? Markets spiraling out of control, trying to figure out what's going on. Anybody ever worked with any kind of like feedback loop, right? A feedback loop is like you take an action, you take a step change, something happens, you read the effect of that, then you make another step change. The best way to describe a feedback loop is when you're hydroplaning in your car. You're driving, there's like an oily, slick spot on the road. Your car, which I'm going to draw a very awesome picture. This is a Bugatti. If you squint your eyes, I promise. Here's the race car, right? You're going through here, you hit this, all of a sudden you start steering and you start hydroplaning, and all of a sudden you receive that information. Your eyes are like, shit, we're hydroplaning, let's turn this way. And you yank the car this way, and then you're going faster, and then you yank the car this way, and then you yank the car this way, and then all of a sudden you crash. Hydroplaning, you know, your system, your feedback loop diverges. Converging would be you hit the slick spot and then you turn correctly and get back on course. So you have a diversion. There's some mathematics to this. We learned this in engineering school, and a convergent mathematics to go with this. You make a steering change, the car reacts, then you react, then the car reacts, then you react. And if you're overreacting each time, you diverge and you crash. If you underreact or react the right amount, you likely converge. There's all kind of factors in this: reaction time, the amount at which you steer, etc., and the time at which you get the delay from the signal. All that's important. So what I mean with divergent, it means that algorithms are trying to track the stocks they're trading. Futures trying to track stocks, and your car is trying to track a straight fucking line as you're driving. You're trying to stay on course. An airplane, autopilot, same thing. If somehow you slip to the right, you kind of want to turn to the left, but enough that you get back on course. What happens when you break through the DD band is you're crashing into the side of the wall. The higher amplitude, yeah, you guys are understanding like the higher oscillation. The market is desperately trying to figure out and oversteering where is that liquidity. It should have been here, and all of a sudden it's getting bombarded with an abnormal amount of selling. And all of a sudden we've now oversteered, and now the market's like, go up, no, go down, no, go up, go down. It's like it can't get a hold of itself, and it's now spiraling out of control. You get divergent mathematics there, and that's what causes the big oscillations. When you break through this band at 7 o'clock at night, you don't notice harmonious, simple, distributed volume like you would see at any normal trading day. You see random, chaotic, spotty volume at the peaks and the troughs of all of this movement, because the market is desperately trying to get a hold of itself. No, there's the sellers. No, there's the buyers. No, there's the buyers. No, there's the buyers, right? It can't figure out where they are. Volume becomes crazy. It becomes unpredictable. It becomes out of control. So when you break through that band, you can prove the market's going to fall apart. Great. So let's pretend that you have that knowledge. As a trader, do you think anything down here is predictable just by the way the volume looks? We're talking about how volume prediction is so important. Is anything down here predictable the way I described it? From your perspective, how well are your, I don't know, harmonics, Elliott waves, MACDs, VWAPs, how any of that shit gonna work down in here? The market is literally spiraling out of control. Right. So down inside of here, would you understand that if the market does somehow break the structure, one thing you can guarantee is that we're up and down 20, 30 points, 40 points, up 20, down 20, up 20 in like 5-minute spans, right? How fun does that sound to trade? Right. So the idea becomes, we can understand that these structure points mean that the market is bad. So what would you do if it's unpredictable down here? Could you make a different kind of choice? As a trader, what would you do? Knowing nothing else, just by the theory of this alone, you could sit out. This is the crazy part of the market. Let me sit out. And so the idea was that these volume prediction strategies become very good when it comes down to risk management. You can tell when the market's going to fall apart and when it's not. You want the proof? Here it is, right? Let's show you how the V's are different. Let's kind of get back to using our same drawing tool, right? Below the band, here's your V's. It's actually getting wider. It's diverging, right? Here's that. Here's that. And then as you're getting closer, it's still fat and still big. And then when you get above here, what do you notice the volatility up here? Can you guys describe the volatility differences above and below? Above, below? What happens when the market gets back on course? It's more convergent, right? It's less choppy. So imagine the idea, just as this one example of like this great idea. We have like 15 indicators that do similar things, right? The coolness of it. If you were to trade your Apex account, your take profit funded with trailing drawdowns, what's the biggest enemy to trailing drawdown, right? You guys use trailing drawdown? Yeah, smaller V's, tighter market, right? What's the biggest enemy to your trailing drawdown? Imagine you long the market and then it goes up, then all of a sudden it drops really quickly before it goes up, and then all of a sudden you blow up your account even though you were winning the trade. Whipsaws and volatility, 100%. The reason they have trailing drawdown is because your lack of understanding of volatility. When structure is broken, volatility is big. And how do you know volatility is big? Because if you write the word volatility like this, it looks like a V. As a matter of fact, volatility looks like the word volatility. I always teach this, which is fun. You can literally write the word volatility next to the V. There's the big V for the word. Okay. And volatility is VOLALITY. Volatility looks like fucking volatility. The word itself kind of, you literally can see the word in these candles. Okay. So you kind of can like say, all right, I created a rule. I'm going to sit out below these bands and then finally take my stabs when it's tighter right here. Okay. And that's really neat because Now you have a trading rule. All of this to boil down to one rule. When structure falls apart, I can guarantee the volatility is going to get crazy. And you can see it gets wider. It not only gets wider, but it actually curves. It's not even a linear sell-off. If I were to draw a line here, right? Let's kind of draw the line here. Like, let's just draw from low to low to low, right? It's not even a nice gentle selling. As you see, as it's falling, it falls lower and lower. It actually breaks through that little trend line you draw. It can actually start to exponentially go. The lows are actually curving lower, which means it's accelerating as it falls. Good luck, traders. Almost sit out, right? This is what happens when we put mathematicians in the market. Obviously, I'm a mathematician, and this is what we come up with. And apart from like the goofy stream antics, underneath, the theatrics, we're very serious mathematicians here, and this is very important to us. Now I have a rule, right? Now I've done this to create tons of rules as to why or do or don't certain things in the market. And when you break through this band, you can see volatility gets crazy. As a matter of fact, the market does everything it can to fight off breaking that band. And as you see, every time you touch it, there's just some magic volume that seems to appear on the other side of this trade to buffer the selling, right? And again, you can't argue what you see. There's the volume and there's the volume. With 100% certainty, you will see volume there. Now, without knowing anything else, let's recap what we've learned so far. You know for a fact that when you get here, you will see volume. There it is, and there it is, with 100% certainty. Okay, so number one, 100% certainty, there will be a volume spike there. There will always be traders there. Number two is, I can't predict if they're going to buy or sell. So it's unpredictable still. Price action still unpredictable. Where it goes, unpredictable. Direction. What also is certain is that below this line, the structure is broken. Below, volatility goes way up and maybe accelerates. I'll probably sit out. Below is going to sit out. Okay. Let me sit out because I don't like that. All right. And number four is above, the market is nice and stable and volatility goes down. Okay. I can already make a trade plan out of this. I know that below I want to sit out, so I can have a rock solid stop below and just bet that the market doesn't sell off or doesn't become crazy. Let me take a bet to bet that the structure holds. When futures market is open and stock market is closed, it would be a market crash without the stocks to go with it. Why would futures fall apart if the stocks are closed? So let me take a bet here that the futures market doesn't fall apart and stop very close below. Now, if I know that it goes down inside of here, I can just get out of the way and let it do its thing and then jump back in right there to bet that it tightens back up. And that is a trade I do every single time. I've demonstrated it on this stream twice already. Whether I get the big rally or whether I even just get tiny little scalps. NASDAQ's was right there with volume. The S&P's was right here with volume. I've made the trade twice. Even if I'm just retracing half the distance both sides, it was definitely worth a scalp on just to move on. Now, this isn't convincing you guys to buy or sell here, not investment advice. This is just demonstrating a technique. I know that if the market falls down inside of here and it's consolidating down here, I probably sit out as well. So with that being said, this is a philosophy change. Volume prediction is so key to risk management. And you understand that when you learn our stuff, you're not going to learn a lot of, you're going to learn a lot of theory like that, but just to prove to you, we're not selling you snake oil. When you watch something happen 100% of the time, it's kind of cool. Without doubt, when you get to this line, there will likely be volume pretty much every time. Maybe not as severe as the first time, but you're there again. If I were to demonstrate the same trade, let's just maybe just for funsies, tap it with like one contract in one account. Let me demonstrate probably what might be a losing trade. Hold on here. Oh, let me add NQ. So I hope this trade loses, because what I'm going to do is I'm going to show you guys the risk management around this particular setup. Okay. So let me move this thumb off the screen because I only have one more account I still need to trade. And my Tradeifys, I tapped it with one contract here. Most everything that I do that you guys will see me do is based on these principles of risk management. For some reason, immediately we're starting to get volume here. For some reason, I'm betting this structure doesn't break because the stock market is closed. Whether I'm right, whether I'm wrong, it doesn't matter. But just this one thing alone that I'm betting on, there somehow seems to be resistant volume to selling, and it's tend to try to push the price up. Whether I'm right or wrong, it doesn't matter because I'm just betting and gambling in the stock market. But if I'm wrong from the right place. And the entire theory of Rocket Scooter is you can use volume prediction to put yourself in the right place to trade. How many of you have ever made 400 bucks in 17 seconds? I'll be right back. All right. Now, this isn't a sales pitch for this technique. This is an anti-sales pitch for what you're using out there. I stream for free. You guys can watch me for free every day. You ain't got to pay a dime, okay? I share everything I do for free to teach you guys this stuff. We also have the platform, clearly, if you want to buy this with the boot camp, you can learn this stuff also. But my daily streams are just like this as well. I teach as much as I can, but I share with you guys the understanding that you're usually sold a bunch of crap by a bunch of losers. There's a bunch of losing fucking traders out there selling you garbage. And I literally try to back my stuff up with demonstration and live trades while I'm teaching. So hopefully this is important, you guys, to understand there's a whole new school of thought we're pioneering, is that you can't really predict price action, but you can predict volume action, which is interesting because whether I'm right or wrong on the trade, I'm right or wrong from the right place. Hell, I could scalp 5, 6, 7, 8 points on NASDAQ every single time. And even watching S&P's pivot, I was trading NASDAQ just for fun. Again, doesn't mean I'm right or wrong the market. It doesn't matter. I'm just right or wrong the right place. Now, let me tell you something very cool to go with this. We did a back test on this band while we did it, and we spent a whole amount of time. Let me share with you guys what it's like here. Rocket Scooter is a company of 22 people, and dozens and dozens and dozens of volunteers jump up for every little project we do. Project Doomsday was a secret project of can we use CME's CME's margin requirements and risk interval to predict destabilization of the futures market, increased volatility and lack of liquidity based on overnight trading and making these bands. When the futures deviate from the stocks when the market's closed, can this band predict a volume reversal with a high probability? And so we made this kind of project team in our lifetime group. We asked for volunteers, and Rocket Scooter is like the highest concentration of geeks, freaks, misfits, nerds, and math losers like me, and awesome fucking smart people that show up over here wanting to contribute to this whole new great school of thought that we're teaching people. It's that you can use volume. Volume is predictable and price is not. And so even if you're just flipping coins in the market, at least you're flipping coin at the right place. Therefore, you have better control over your trade. Now, we did this thing, and I'm going to tell you, we had people volunteer on a daily basis to go into our platform. We even made instructions. We had dozens of people volunteer from the community. Here's the instructions on what we asked them to do, to go collect data and go collect data and go collect data. There's sheets and sheets and sheets of raw data analysis for months. Every day for like 7 or 8 months, I think is how long we did this. We would just have people collect data and collect data and collect data and collect data. Even Abjad jumped in, one of our developers, and started collecting data, collecting data, collecting data. Every single day, every single day, every single day. Just sheets and sheets and sheets of manual data by volunteers in this community to all come up with this one ratio and this one band to see if it works. And then after months of trial and like months of reading the data and months of coming up with stuff, we came to this very cool conclusion that we finally backtest a couple years later. And we found out that as cool as those bands are, 88% of all days stay inside of them. As cool as that structure point is, you almost bounce every single time. Project Doomsday was this cool thing, and in Rocket Scooter, we actually come up with an idea, and I got ideas pitched to me all the time by our community. We're a community-driven, crowdsourced project led by me, but also different people jump in and do different things. We've got look, we've got all kinds of projects going on. They all have secret names and secret whatever, building new shit, and volunteers jump in, and all we do is data mine and look for cool ideas and come up with something as a community. Project. This is called Project Doomsday, and they have funny names like Crescent Flight, Dandelion, whatever. We're always trying to make cool new shit, and that's kind of our theme here, Rocket Scooter, right? Rocket Scooter is old shit, or Scooter's old shit. Rocket on a scooter is new shit, and that's what we do. All right. So we'll give away in just a second, but the idea is I can use this kind of structure point to make trades off of. Whether I'm predicting the market right or wrong, I'm probably going to get it wrong, the direction wrong most of the time, but I can predict there will be some bounce there every time. As a matter of fact, only 8% of days even have the power to break through and close below. Majority of days will close between. Because of that, I long at the bottom every single time. I use other confluence to decide how big I long from. If I'm uncertain about the market, maybe news is happening or other factors are taking me away from my confidence, I'm going to trade smaller. If everything's lining up, it's a nice, clean, easy day, no news, stock market's closed, no reason for it to break and crash, let me bet a little harder, right? So as you see, since we've been sitting here, if I use a 10-point stop philosophy below the 77 level, it has bounced 3 times without even hitting the stop, because there is buffering to that selling there. There's volume right here. There's volume right here. There's volume right here. And demonstrating this live on stream, I'm glad you guys are here for this. This is the theme of today's little class, right? How to get the D bands? You can get them from watching my stream every day, or you can get the platform itself. You can actually subscribe to all the tools and stuff in the platform. But come to my stream. This is and again, I'm not trying to sell you guys anything. You can obviously buy our stuff, but in reality, come to the stream every day. It costs you nothing. At least come tomorrow. At least come in the mornings. We stream at 8:30 in the morning, all throughout the day. I'm also the host of My Funded Futures TV, their TV show, at lunchtime. So I stream here in the morning, and then I run My Funded Futures show right at lunch, and then I stream in the afternoon. So I'm here all day long. Okay. Okay. You guys, but yeah, sub to the channel. Come here. I'm here every day. And right now I'm on a journey to make $150,000 with Tradeify just to prove I can do it and go live. And I already hit the $150,000 target a little over a week ago. And now I'm just babysitting the accounts to make a little bit of money just to go live with these guys. So I need to make like about $1,000 per account going forward. Let me get that screenshot back up here for y'all, which is including the trades I just made. I did hit DLL, my daily loss limit on My Funded Futures. All the damn accounts, it's the DLL always gets me, and I hate that. Even if I get the trade right, the volatility gets me, which is why I'm usually only trying to trade S&P and then My Funded account so I can survive the DLL, but whatever. Still okay, still profitable for the day. Just trading these bands. I mean, that's basically all I've done. All right. So if I show you guys some cool history of this, I'll actually show you where that 88% comes from. Now, again, the margin requirements update every day. And you guys come to the stream, you'll get this information for free. I mean, it's like, you don't got to buy anything, you guys. This is not a welcome to the timeshare sales pitch. Give me your credit card. Just come to the stream, man. It doesn't cost you anything. Y'all can be there. Y'all can hang out. But if you do want to buy the tools, that's cool too. It's really not the goal of the stream though. But the link is in the description below. Our platform is $100 a month to try out, and then it's $159 every month. That there comes with everything. All right, so you'll see that if I just count the days, the 88% is pretty easy to see, right? Do we close inside of the bands? Check, check, check. We dip down, we even close inside of the bands. Check, check. This, we close outside of the band, okay? This is where the 88% comes from. Check, check, check. These all close inside. Like we open in the band, we close inside the band. Check, check, check. It's very rare that you break the band and keep going, which means it's a reversal pivot just about every single time. And that's why I trade it reversal pivot every single time. It's very rare. Even when the market's selling off in bear market, let's count them, right? Inside the band, check, check, check. Oh, now we're bear market. Okay, nope. Check, check, check. Nope. 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 You start to have a little bit more. This one actually dipped down and came back in. So that's a check, that's a check, that's a not. And even in bear market, you can still see you still have a lot of, in the worst market, right? We're selling off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Inside. 1, 2, 3, 4, 5, 6, 7 outside. Even in bear markets, when the worst selling comes through, we still hold the bands more often than we don't. So, which leads to, you guys might hear me on the stream or at my funded say EST all the time. Everyone always types in chat. Simon Dean always types in chat EST, because the odds are good that even in bear market, it's more likely to hold than it doesn't either. So I make that trade every single time. Now in this bear market, I might make the trade with 1 contract versus the bull market, where I might trade it with 5 contracts because it's less volatile and more stable. Markets are selling off, I'll still tap it, but trade it smaller. And today is every single time long, same stuff. Market's clearly selling off on bad news. I'm hitting it with 1 or 2 contracts, right? Market's closed. I don't have stocks to give me backup data. So confidence is lower. Make the long. And like, look at this. Get a free 10 points on the S&P while we're sitting here. EST, 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 right? Yeah, the annual plan is $48 cheaper than paying month to month for a year. We usually have sales in that yearly plan. That's why it's there. Yeah. So sometimes you'll get the yearly plan for like half price or something. Can you use a little insight on how the DD bands are generated? It's based on options trades. So Mpal, go back to the beginning of the stream. It's derived from margin requirements. CME has a program called SPAN that they use to calculate margin requirements from distributed risk and risk scenarios by reportable positions. So then they make the margin requirement. We take the margin requirement and reverse back into SPAN to derive where the positions are likely to be distributed and create the bands from that. So we reverse engineered CME SPAN program. So you might hear that word a lot around here. We reverse engineered a lot of stuff that's out there to make trading tools out of. And again, like I said, I'm the leader of the group, but this is not like all birthed out of my head and it's like the Matt show over here. Volunteers in the community get excited. We all come up with ideas. Someone pitches an idea to me in the community, like, hey, I got this cool idea. Let's check it out. We'll study it. We'll make a thing. And then it gets donated to the whole Rocket Scooter Collective, which is just a collection of cool shit that's exploitable. And people really take passion on this. Like most of our group members are like, we call lifetime members. They basically just buy the software outright and they've been here forever. And we're always making stuff. As a matter of fact, in our boot camp, even members themselves publish papers about our stuff. Just casual members will publish papers. We have this one called The Edge and Probabilities. It's a little PDF that we have. One of our members named Ian Rader and I co-published a paper about some technologies that some parts of our technologies, but probabilities that we have like a bullish thesis and we come back and prove. And Ian went and collected the data. Just he's a member And we publish papers based on our things as well. And you guys can learn a lot of stuff about it. Yeah, so if you guys just watch a stream, you're like, oh, Matt's just this like goofy streamer or whatever. You didn't know that whenever we turn the, today I've turned the goofiness down, and we actually do very serious work. And we have data to support distributions of different things we claim. 80% of candles only give back less than 33% of their month range on the monthly basis. And then we prove the data with it. And then when you join our boot camp, which is only literally $1 a day, you get all this information. And our whole job is to find out what's the highest probable thing that could happen. All right. So it's 10 o'clock. I'm going to do a giveaway, and then we'll do one more in about 15 or 20 minutes as well. I'm going to start doing that in a second. If you guys have any questions about what I'm talking about, that's just one of many cool things we built. The idea is volume allows me to pinpoint where I want to trade from. Whether I'm right or wrong, at least I'm right or wrong from the right place. That's very important. No, I just demonstrated a few trades. I'm out. Like if I was in a trade, I'd show it to you here. I'm fully flat right now. Why is that different from volume profile value area? Because volume profile, it's a great question. Volume profile right now, if there was a volume profile on your screen, it's based on past volume. This is volume that hasn't happened yet. It's predicting a volume profile. That's like the idea is that we're predicting tomorrow's volume profile today. So this is open interest wall is a whole different conversation, a whole different technique. This is only based on futures margin requirements. We have 15 different techniques. We try to find volume in multiple different places. Right? Yeah. But the fact is that you can watch this every day for a year and see that it's 100% and then make your judgment call there. And so Aura, we have another technique that uses options, and that's our liquidity map, which is a whole different topic as well. Let's work with crypto futures, any futures on that are underneath the CME exchange that uses span to create margin requirements. I believe Bitcoin futures is on our list. Let me double check. Yes, it is. We have the same range of Bitcoin futures. People donating money. Thanks to all. Really enjoyed going through the boot camp, Fraser, and look forward to the next one. Here's some money for someone to go through the boot camp. We have had 2 members donate $50 to the community to get, let's round that up to 3 boot camps. Okay, so because you guys donated $50, I'll donate 200. So I'll give 10 seats to the boot camp. Thank you. So anybody who donates something to the boot camp, I'll do 3 to 1. So I'll donate $200 so that 10 more people can do the boot camp for free. Free. There's nothing that comes out. You learn everything for free. Just for being here, you guys. That sounds cool. Thank you. And these are members that have taken the boot camp. Looks like they're donating for you guys. They're trying to tell you go to the classes. So super cool. Super cool. We start the boot camp on Monday. Yes, we do. Okay. And for me, what's very important, especially like somebody that works for My Funded Futures and I work on the TV show, is that a lot of times there's just a lot of people out there trying to make a quick buck off of traders, selling you very expensive tools and techniques and not focusing on teaching you why they do the things they do is very important. Some people say, just do it because I say so, or just do it for whatever. But our thing is like, here's a paper with the stats, here's the paper with the probabilities, and some other things. So this is just using futures to predict volume. One of the other cool things we do is what somebody mentioned earlier with options, is we can use options to predict volume. And we have something called liquidity maps. This is the big tool that we have. And liquidity maps can actually extract not only high volume pivots from options, but our algorithm basically reads the whole entire options market and can derive where market maker positions are mathematically through assumptions we make. And then we map out the dealer positions, because dealer positions are going to be hedged to neutral 100% of the time. That's another 100%. Because dealer positions are hedged to neutral, these orange and blue lines are volume 100% of the time as well, based on options. And so if we isolate dealer options, we can give you one discrete pivot for weeklies and one for monthlies to give you actionable pivots as well, doing the same technique. I'm either right or wrong on the trade, but I'm right or wrong from the right place. Monthly hedge pressure, this orange line is another one of those pivots. This is based on options. And so as you see, this pivot undeniably 100% of the time is volume as well. Whether I'm right or wrong, I'm right or wrong from the right place. So somebody mentioned options earlier. We have a whole other technique that does the same thing. As a matter of fact, every time you touch this orange line, especially the first time, you will see volume. And just like the green line, when you break through it, the volume becomes sporadic and chaotic, i.e. their volume here is accelerating the amplitude of these volume waves. It's not clean and easy. As a matter of fact, when you start approaching the monthly hedge pressure and break through it, it creates what's known as a gamma squeeze. Okay. And the gamma squeeze is people are forced into shorting as puts rapidly go in the money with high gamma. So this is another cool thing that we do. All right, so I'm about to get out of here. So I'm about to do the giveaway in a second. But as you see, this orange line becomes a very decisive pivot on the state of the volatility of the market as well, just in a different correlation. So in this particular indicator, right, we sold and sold and sold, and the market's somewhat stable, like the V's are really small. And then once we get below it, do you notice a similar thing into the green line, right? The V's are somewhat small-ish here. And then when you get below here, it's starting to kind of like flip out, and the V's are getting much bigger and much bigger. Do y'all see that? Breaking monthly hedge pressure is also a destabilization point of the market. Big V, bigger V, really big V, right? And this is caused from gamma squeezing. And as a matter of fact, this is the same thing I told you earlier about the curvature of the market. You don't have to take my word for it, but you can see gamma squeezes create curvature and lower lows go faster. It's accelerating. Does everyone see the curvature when I say that? If I were to draw like a straight trend line, it goes like this, right? You can all see that the lows are actually getting lower, more exponential. It's like parabolic in a way. You'll see that, right? Curving. Can we all see that? This is the effect of gamma squeezing. So we're pioneers of the gamma exposure field, and that's what we're doing. So y'all see how that works? You can prove that when you start to do this, volume is actually starting to increase as well due to people forced to sell, right? So when somebody forces somebody, 1 forces 2, 2 forces 8, 8 forces 16. Financial Fred donated 20, so I'll donate another 60. What was that? 13 plus 4, 17 boot camps. Okay. Cool. All right. Futures market's open till 12. Okay. Now, going forward, the idea is that volume is everything and volume is king. If I wanted to long the market or short the market, why don't I just pick where traders are going to be? We can use options to say where trader is going to be. We can use CME structure points to say where trader is going to be. Whether I'm right or wrong on the direction, it doesn't matter. There's still somewhat of a winning trade inside of here and here. Whether I get the direction wrong or not, but at least I can scout together, you know, a little bit of whatever. And you guys are used to like looking at the market move and then have some kind of pattern. And then you're betting on the direction. Let me just, hopefully the market rallies from here or it crashes from here. The market's already moved half the distance and you're jumping in or trying to fade it. Instead, I'm just waiting and waiting and waiting and waiting and waiting and then hitting the trade at my pivot, just betting that we hold, right? And the goal is with volume prediction is that in a risk management sense, I want to make sure that there's somebody coming in after me to buy, and I want to kind of be first if I can. Now, whether I get the direction right or wrong, I'm as good as anyone else predicting the market. I can't do it. Nobody can. But at least I can make my bet at the right place. And that's very important to traders, right? How do you donate? You have to be a member of the stream. You have to subscribe to the stream to be able to do super chats with donations. So Kevin, you have to, I think it's like $5 a month or something. The link for our Discord is in the description below. Okay. iDoc, hey, what's up? So you guys have donated 16 bootcamp classes. That's amazing. So 16 people can come to the entire bootcamp for free. We don't do it as a money-making thing. It's just like this stream. It's very inexpensive, and it just covers the salaries of the 2 people that make the handouts, and the videos. iDoc's college-age niece makes these beautiful handouts for us. And so we help her, pay her a salary to do this. Your $20 pays her a modest salary to make our cool tools handouts. How to know when to take profit? Well, yeah, there's a whole style and system around where to trade and how to trade and risk management. Like Kevin, oh my gosh, thank you for joining, Kevin. So that's 20. So I'm doing 3 for 1. Jeez, man, 20 of you guys are going to come. Bootcamp starts on Monday, by the way. It's a 20-day thing. There's no, like during the bootcamp, there's no, by the way, here's the real price. There's no mic drop. I'm sorry, there's no rug pull that comes. The bootcamp is what it is. It's $20 and you're done. A lot of people will like say, you know, come for $20 and you do a class and you're like, well, I need $500 more. There's none of that here, guys. Like usually the trend here is that as people take the bootcamp, they tend to donate and pay it forward. It has been a culture of the Rocket Scooter team that everybody goes through it and they're kind of like saying, trust me, take it. It's life-changing, blah, blah, blah. I'm reading what people are very loving in the comments. Thank you guys for that. The tradition here is people pay to do it and then they donate to someone else, or people that go through it then pay to donate to someone else. And it's been like that since we started it last year. We get roughly 300 to 500 people take the boot camp every time. It's crazy how big it gets, and most people pay it forward. So, or a lot of people pay it forward. So, do I have a link to join the boot camp? Yeah, it's here. Let me show you guys. And again, this was, I don't tell people to donate. It's just every time I start talking, we have an educational thing. The members in the week of, we start on Monday, you're really excited to pay it forward. And that's just a culture that a couple of people started here. And it just kind of exploded. Here's the link to the boot camp. All right, so it's 20 days. We give you the handouts. We give you the sticky. Thank you so much, man. Oh my gosh, you guys are so great. All right, so again, every time somebody donates $20, I'll donate 60 more. So 24 bootcamp seats. Cool. Okay. Let's do a Tradeify straight to funding giveaway. And by the way, if you guys, we're affiliates with the partners you see on the screen. If you use code Rocket Scooter for all your prop firm needs, we get the same or the best deals that you can get. If like My Funded Futures is having a deal, always use our code. We get the same deal as their best deal. What we do with the money we get from that is we go out and buy accounts to give away to you guys. Right now, we give away 80 accounts every single month, a lot of fundeds. And every time we get to 1,000 viewers, which we're hoping to get to soon, I'm going to spend another $3,000 to go buy 20 more Tradeify straight to fundeds to guarantee a funded account giveaway every single day. So funded. So right now, I'm going to give away 2 funded trading accounts. 2 of you are about to become a funded trader in the next 20 minutes. So let's do that one time while we're chilling. Everyone, do me a favor. Type Tradeify in chat. You guys know the drill. Starting now, type Tradeify. I'm going to give away 2 50K straight to funded accounts with these guys, which means skip the eval. You are now a funded trader. Congratulations. We spend, affiliates out there like to make a lot of money. Listen, I'll tell you guys, iDoc and I are very well off. Our biggest expense is pickle. We do very well in life. Okay. Even before trading, I make over $1 million a year, even before trading. Most of your affiliates out there are scraping together 10, 20, 30K a month salary trying to sell you codes. So you go out there and buy a Lambo, go out there and pay their apartment bills or whatever. Affiliate revenue we get, we turn around and take the majority of it supports the Rocket Scooter development and the employees here. And the majority of the rest of it, or the other rest of it, goes into buying accounts to give away to you guys. We just kind of donate it back. A huge portion of what comes in. So you guys using our code, we go out and negotiate bigger and bigger. Back in January, we used to get like 12 accounts a month to give away. Now we have 100. And if we get to 1,000, I'll go out there and negotiate for even more. Our partners are very generous. Our partners at Tradeify are very generous. Our partners at My Funded Futures are very generous. They give us so many accounts to give away because they want you to be introduced to their firms. And I've traded with all these firms on my screen with the exception of Take Profit, but Take Profit's also good. And I can vouch for, like, at least in the prop firm space, they are the ones that have the most integrity, I think. And So they give us so much to give away every single month. And as we're getting close to getting 1,000 concurrent viewers, which is it's so awesome because, you know, we've been growing so fast. And my trading is like this. I demonstrate my trades live. I teach you why I do it. And I kind of walk you guys through the process of why I do what I do. Just while we're chilling here, let me show you guys let me log in here. Show you guys like some performance stats here. Type in Tradeify. I do show the history and journey of like the trading I've been doing. Oh, let me see if it updates with today's data. As of right now, I've landed at my final destination with again, I've been babysitting these same Tradeify accounts since pretty much February. And basically, I'm at my max profit target I can get to. Right now, the goal is I'm just babysitting them the payout. So I'm not going for bigger growth. I'm capped out. So with Tradeify, you can only carry so much over and you can only take so much payout. My goal was to get to 150K and I got there. And now we've had some volatile hits to the trading account, but I have my P&L has gone up. This has gone all the way back to February. I've gone up and up and up and up and up and up and up. Okay. So right here, I'm just sort of trying to inch a little bit forward to take my last round of payouts until Brett pushes me to live. And essentially, I'm going to kind of babysit here. I'm trying to make maybe $500 to $1,000 per day per account. And that's basically it. My net cumulative over this time period, again, this goes through all the crash and all the stuff. Let me just take in screen cap of this little spot here. Let's take a picture of that. Per all the accounts, I've done, I don't know how many trades, whatever it says, 500, 600, almost 600 something trades. I've maintained a 72% win rate, even in this crap market that we've seen. And all these trades, you watch them stream live every day. All right, you guys ready? I don't copy trade. That's the secret. Copy trading increases your risk. I never copy trade. That's how I do so well. Copy trading enhances your losing rate much faster and you spin up blowing up faster. You will always see my accounts are all traded individually, one at a time. As you see right here, they are never copy traded. The reason for that is if you split up all your risk, you blow up much less. Today, one of my accounts hit max drawdown. Oh, that sucks. But the other 9 that I'm trading, 7 of them didn't, right? Splitting up your risk allows you to have that happen. I took a small stab with some of them here on the DD band on NASDAQ. I closed out with profit in like, I guess 4 or 5 of them. And one of them I held for a runner and it lost. Here, I stabbed it with the rest of them, took profit, and that happened. We landed one more time. I stabbed it and one more, took profit, and that's it. Right? We're giving away 2 Tradeify straight to funded accounts. So you are now going to be a funded trader with Tradeify. Literally, you are funded. You've skipped the eval stage. You are now funded. You can start making money now if you win this giveaway. We give away 100 accounts every month. And we're about to give away 24 bootcamp seats. That's going to be fun. All right. Maddie, are you here? Usually Matt helps me with the bigger one. We need to do the random drawing. This many people. It's going to be hard to spin the wheel how many times. Get ready. Are you ready? Are you ready? You guys know the drill. Type in Tradeify in chat. We're giving away 2 funded accounts. Supporting the bull zone. Everything rocket scooter. All you need and all you want. Best system in the world. Whoever's name is drawn, you're now funded with Tradeify. Congrats. Pondi Ma, type something in chat. Gotta type something in chat. Pondi Ma. You don't win. That opens the door for one more person. Okay. Well, you picked the wrong time to go take a leak. Okay. There's a lot of people entered. Winner today is Sunshine Perkins. Type something in chat. Sunshine claimed it quick. All right. And you guys let me know if I miss any donations to make this 24 going up. All right, one more person. Brr, brr, brr. Sam L. You're the next winner. Sam L. Or EI. No, that's an L. EL. Type something in chat, buddy. Congrats, congrats, congrats. Okay. How's this going to work? Is it two you guys at one? Join our Discord. Do me a favor. Join the Discord very quick. You're going to send our admin Slacks a message or post in the Discord contest channel that you won. You need to take a screenshot of your YouTube account. So no longer type Tradeify, you guys. Tradeify is done. It's over. We're doing another thing. So stop typing, please. We're doing another giveaway. Congrats, guys. Okay, you guys are both funded traders with Tradeify. Their straight to funded program is amazing. I've been in it since February. I've taken close to like 50K of payouts. It's fantastic. I'm about to go live with those guys. I absolutely love it. They have a pretty cool, it's 20% consistency on the funded account. Very generous drawdown, very good program. You get approval on your payouts within an hour. You get your money in your account the same day. Brett has only denied 2 payouts since the history of the firm. Can you believe that? It's the history of Tradeify. Only 2 people have been denied payouts, and it was for account sharing. That's a tremendously awesome track record. We're huge fans of Tradeify here. Huge fans of all of our partners here. As you guys know, I work for My Funded Futures, and I still talk about our other partners. We're fair in the space, and we want you guys to have a great experience on what products you do like out there. Every one of our partners on the screen, I vouch for with my name, and I really say these are some of the best. So anyways, congrats for being funded with Tradeify. Send Slacks, SLACKS, a message. Post in the contest channel that you're one. I'll ask you to verify this your YouTube account. So open up your YouTube account, take a screenshot of your name. Everything must match up, including the avatar. And he will give you instructions on how to get funded with these guys. So everyone else, like I said, keep using our code out there because we keep asking for more and more and more accounts. with Tradeify, we used to give away 3 accounts a month. Now we give away 35 a month with Tradeify. So if we get to 1,000, I'll give away 55 a month with Tradeify. And this is, if you guys keep using the code, we keep going back to them and saying, give us more, give us more, give us more. So that's pretty cool. All right, congrats. Now we got to do the giveaways for the boot camp, which we're going to do one more thing, and this will be fun. Since we have 24 to give away, only if you were not a member, you've not taken the boot camp before, nobody else, only people that haven't done it, so that you don't, like, you can't get it again. It's just people you haven't done it before. Type in free class. The bot watches the chat for the typing timer. That's it. She typed 4 times. As a matter of fact, who typed 4 times? If the bot doesn't pick it up, then the bot doesn't pick it up. I can't see. So if it didn't, Pandi Ma, wait, did Pandi Ma actually show up here? Oh, okay. Pandi Ma, okay. Then Pandi Ma wins as well. Okay. I didn't see it. I see it right here. So Pandi, 3 of you guys win. Okay. All 3 of y'all win. Congrats. I'll honor it. My bad. I didn't see it. Okay. So by the way, yeah. My bad. So I just sent my admin a message. I'm gonna go buy another 50K straight to fund it for you, Pandi. I didn't even see that. My bad. Well, in my defense, you guys are fucking spamming chat, so I can't. It goes too quick. I can't see. But the bot right here picks up if you type. So my bad, Pandi. If you're here, make sure you win. My bad. So yeah, like I said, we're not dickheads here for sure. You guys cool? We cool? Free class. One word. One word. One word. Where's Victor at the band hammer right now? Also, there's a delay on YouTube, so like what you guys do in chat, you're actually like 7 seconds in the past, by the way. And by the way, we're going to give away a lifetime membership to Rocket Scooter today as well for being here. This is full purchase of the platform, the one we were supposed to do last week and someone messed it up. Okay. Let me see if Matt's here. Maddie, are you here? Matt the mod? Any of my mods here can help with this. What I'm gonna do is I'm gonna give you an HTML dump from this. You gotta throw in the chat GTP to do the drawing for 24. Okay. In 30 seconds, I'm going to cut off free class. Oh, dude, this song is... Yeah, dude, this song hits good, right? Actually, I can probably do it myself. All right. Okay, you guys got 10 seconds, and I'm gonna cut this off. I need to grab the list of people from the source code, and we run in ChatGPT to draw. You can't spin the wheel 24 times; it'll take forever. Okay. 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay.
emotions spinning, fearing green, man, it clouds your view. Stick to the plan, we gon' see this.
Okay, get a little.
Let me show it to you. Mind moves, but the mindset stay. Discipline first, that's the only way. Big wins, small wins, all gotta play. Like a scooter, we don't fade away. Yeah, money moves, but the mindset stay. Discipline first, that's the only way. Big wins, small wins, all gotta play. Rock a scooter up, we don't fade away.
All right, you guys, stop typing free class now. You gotta stop. Awesome, guys. Okay, let me do a little stuff on the side here. Then we'll have to do the drawing. Here. All right. I always forget how I do this. No, it's not gonna be there. I got that fresh haircut. I got a haircut yesterday. You like it? All right. Give me a second. One second here. Where is it at? Matt, are you here? Matt the mod usually help me with this. Okay, BR, can you send me a message in Discord? I forgot what we did last time to grab the names from here. Maybe we can just cut and paste? No, I can't do that. Oh, let me grab this list. Select all. I think that's going to work here. Let me do this really quick. We'll get back to like the teaching in just a second. Here's a list of winners. Okay, but it won't let me grab from the frame entries. Okay. Now how can we capture this from the frame? No, not that. Pull this from here. Go here really quick. Okay, now right. Inspect. Oh, that's what I'm going to do. I'm going to inspect the page and let me grab from here. All right, cool. I have the class list, user list. Okay, I'm just ripping the data from here. Okay, I got all of you guys. Ah, there it is. User list. Okay. Mm-hmm. List users. Okay, let's put in element inspector list. Grab this from here. I can copy. All right. Copy. And we're going to paste that here. I had to run this through ChatGPT to get the names. It's a little difficult, but I do it this way every time. All right. Now let's grab, it's going to do a little further in here. User, come on. So DD don't work twice. Oh, wait, what you're saying? It's a high volume pivot. It's a pivot. Like you bet whatever direction you want to bet from the pivot. It's up to you. The stock market's closed. The stock market is not open, so you're not going to see momentum if the stocks aren't open. But the idea is I've scalped both bands all day today, very profitably actually. Okay. Again, it's all okay, let's go to here. Copy. Okay, let's go here. Open this up. Yeah, for some reason, it's not able to grab the list of users from the inspect. I'm trying to figure out where I can grab that. I have in front of me, but it's not letting me. I don't want to pull them out individually. I need to rip the entire. Oh, there it is. Okay. Copy. Maybe that'll work. Okay. There's like some kind of. Okay, let's move this lower. I might need some of my programmer friends here to help me out with this. Okay, so what I'm trying to do is grab this list of names from this frame here, and I can't grab it whenever I'm inspecting the element here. You can maybe help me out. I'm not an HTML programmer by any means. I know enough, but that's not my skill set. I need to grab this list of names and throw in ChatGPT because it doesn't let me. I can't grab it from the source. It's weird because these are hyperlinks instead of a list. So what I did was I inspected the element here, and I've got the stuff. So I need to rip these names out of here. And I'm down inside of here, and I've got the list one at a time. But I need to copy, I need to get all of these names out of here. I'm not an HTML, that's not my skill set. I wouldn't know how to use any of this stuff, so you guys got to walk me through it. Michaela one again, LOL. How do I get this list of names off of this page here? I've done it before and I always forget how I end up doing it. DDBand works really well. It does, yeah. So if you copy the div class and paste the whole thing in ChatGPT, it probably detects it. Right, that's what I was trying to do. Copy. I guess it's just Control-C this. Right, Control-C. That's what I keep trying to do. The list of names is not popping up. That's what I always thought I did. I'm like, oh, wait, here we go. Hold up. Yeah, no, that's what I did. Oh, wait, here it is. Oh, okay. I'm an idiot. Yeah, that is what I was doing. Yeah, you're right. It worked. Okay. All right. I swear that's what I was doing. I just didn't see the... I'm like, I know I'm dumb, but I'm not that dumb. All right. All right. That's exactly what I did. But what I was doing was I wasn't scrolling over far enough in the list to see. Okay. Okay. Sort or find a list of names in this source code and produce the list of people names. Produce a list of names. The message you submitted was too short. All right, I need somebody to help me with this. What did I forget to say? Including get touched. Including get touched. It says the list is too big. What the heck? Okay. Let me run this through my ChatGPT app. Let's try this again. Yeah, I wish there was a faster way to do this. Okay, let me do it on my app. Because I actually pay for it. Okay, let me grab it. Did you paste bin of the source code and write your JavaScript bookmark? If you guys want to help, I need a little app would be kind of cool. Just to click a button. Hold on. Y'all are, I love having so many programmers in here. Let me grab it real quick. It's just a ChatGPT. It says the message is too long, and I think I've the free version on here, so I'm gonna run into my own paid version here. I should have spun the wheel on it, right? We're just drawing 24 names randomly from this this bot that I use, which rips the data from you guys chatting in chat. But the thing is that it doesn't. You can't just cut and paste it. So that's the one problem with it. So we're gonna run it in ChatGPT to pull the names out of the code. And randomly choose them yourself. That's what I'm about to do. But hold on. We're trying one more thing. It says ChatGPT was like, your message was too long. So let me see. Can you copy and paste YouTube chat? No. Well, this is from the people that entered the contest watch. This is just the way we're going to do it. All right, let's go to ChatGPT. All right. Yeah, it says it's too long. Damn, okay. That is a problem we had last time. Okay. Let me delete some of the stuff. That's the names list. So it's giving me in 2 parts. After the first part, asking for a second, saying the following message is too long. Yeah, every programmer here is like fucking HTML. All right. If one person here is a programmer is gonna help me with this real quick. I don't have time. I get back to the stream, but let me, if I can cut and paste this to you guys, can you just pull up a list of names for me, and then you do it. Yep. Where are you going?
Why is there money on the floor? Oh, pickle.
What's up? What's up? Yeah, somebody just, if somebody can help, just send me a DM. Copy it to text. Okay. Where are you going?
I'm gonna go work.
You smell good.
Thank you.
What are you wearing? My cologne?
Yeah.
Oh, I'm glad I bought that. All right.
Pickle.
Okay. Bye.
I'm gonna let him run around.
Okay. Have fun. Yeah, let me do. I'll do your thing really quick. Yeah, it says it's way too long. Okay. Help me out with this real quick. That way I don't have to, it's Jordan. All right. Thanks, Jordan. I got you, bud. All right, Jordan's gonna help me out with it. All right, there we go. Alan sent me a message too. All right, do me a favor, Jordan, if you can help me. Again, I don't have time to fiddle with this, but I ripped that list from the, I just copied the div from the window and the inspector, and then all that code, just use ChatGPT or something to rip out the names from that. It'd be so easy if I could just cut and paste from the bot, but every time we have to do this. It'd be kind of neat is if we had an app that would like interact with, like a little add-on that would interact with this page. See, you can't like just copy and paste. Like I can do that for the previous winners. You know, I can just grab this list, but here there's some kind of like, I don't know. Again, I'm not a web designer, so there's some kind of like frame or something over this that's got links here. But yeah, so usually we just there you go. So we'll have 24 winners, and we'll let you guys know just a second for the boot camp that we're gonna start on Monday. New boyfriend perfume, that's what I'm thinking, right? And Niles, I did that like 10 different times, it still doesn't work. Yeah, 24. So 24 free boot camp seats for Monday. All right. Appreciate you, Jordan. All right, Alan here. Alan or Jordan, whoever gets it first. Appreciate it. All right. In the meantime, let's roll lifetime. Okay, so here's another thing. All right, now, do me a favor. Listen carefully before you type anything in chat. If in the month of May, you have used Rocket Scooter code in prop firms and spent over $1,000 total, and you will have to verify this, by the way, you can enter once a month for free lifetime access to the platform. It's a $4,000 software that you can get for free. Once a month, we do a lifetime giveaway for anybody that the previous month has spent $1,000 using our code with our partners. You'll have to get all your receipts and all your purchases and shows that use our code to prove you verified that you spent $1,000 at the prop firm. The idea is if a trader has spent that much, they've probably lost a lot or blown up a lot, and they probably need extra help. They're probably down on their luck. So that kind of trader, we give free access for life, including the bootcamp and software, once a month for free. as a you know, helping hand to somebody that might be down on their luck. Another goodie and said, no, Lee. Can't. You're already doing all right. That's a good thought, though. Only if you are not lifetime as well. Yeah. Somebody said, don't try to scam Matt either. You'll be banned. Yeah, somebody tried to scam it, and they were an actually monthly subscribing member, and they were banned for life by lying. They couldn't prove it. They wasted our time and won the giveaway. Now we got to do it again. Everybody type in free lifetime. So I sent it to Jordan. I sent it to Alan. Looks like Alan's on it. Okay, well, let us know. All right. You must type in free lifetime only if you spent $1,000 with a partner prop firm using our code only for May only. If your name is drawn and you didn't meet those criteria, somebody actually had their name drawn. They didn't meet the criteria and they go, oh, well, can I have it anyways? So not only did we ban them from YouTube, we also banned them from Rocket Scooter for life. We canceled their subscription. We even refunded their money of their last payment, and they were thrown out of the community just for wasting our time. So pay close attention. And if you like, oh shit, I accidentally spent 900, Matt's going to ban me. Don't worry. If you make an honest mistake, we understand that as well. But if you're like deliberately trying to deceive us, we throw them out. We don't want people like that. Market closes at noon, which is an hour and 10 minutes. Oh, thank you. Thank you. Thank you. Alan grabbed the list for me. Appreciate it. Okay. All right, Alan. I'll take it from here then. Okay. Thank you. Okay. Now, we're going to have some fun with ChatGTP. We always have to do this. So I'm going to try it. It'd be cool if we had like a little app or something that I can do that would just do this for us. Okay. All right. Randomly draw 24 names from this list of names. And I want you guys to pay attention. These are the winners. Cool. It's a way we're gonna draw 24 names all at once. Probably been faster to spin the wheel. All right. So if your name is on this list, I'm gonna read them out. You're now a winner. And I'm gonna put this in our thing. You all have free access to the boot camp. Congrats. All right. The winners are Adrian Martel, Rahul T, Pigeon, Khan, Quanthat, Greg Morgan, Che Kim, Steve Kruggs, Mox Delium, Lydia N, Randy Chapin, Decibia, Alan Trades, even Alan won. Hey, look at that. Pray for Wisdom, Vixation, Taipei, Trading Baba, Jonathan Okareki, Day Trade Pulse, Rossoro, Full Tilt, Futures, Mark Kudinov, and Nerdy Trader. You're the 24 winners. All right. Okay, so all of you need to take a picture of your YouTube ID. Go to our Discord, message Slacks. I know he's got a lot ahead of him to give you guys. You guys all have free access to the boot camp for a month. If you didn't win, we start on Monday. It's only $20. So, like I said, it's the coolest and biggest thing that we do. We give you stats on all of our setups. And I know we're kind of goofing around with the HTML and did some, you know, programming here. Like I said, I'm a programmer, but not that kind of programming. And my programming skills is probably like a 3 out of 10. I do mathematical programming only. I don't do like any of this web design stuff. Okay. Now what we're going to do is the lifetime giveaway. Again, type in free lifetime. If you meet those, things only if you meet, those conditions. You spend $1,000 using our code with the prop firm. You need to prove every purchase. You get a $4,000 prize right now. Okay, you had to have used the Rocket Scooter code. The penalty is steep if you can't prove it. Don't try to scam us for $4,000. Free lifetime. Anyone can qualify except for existing lifetime members, of course. You spend more on resets, that counts too. As long as you use their code. Okay, and we're gonna spin the wheel on this one. Save this list as a bookmark. It will get you the list by clicking on the bookmark in the future. The list is way too long to paste, by the way. Hopefully Alan can see your multiple message. Jordan, I appreciate it, man. Okay. You see, this is what I love about Rocket Scooter. This is a community of like programmers. I've got like people just message me. I got it. I got it. I got it. I got you. I love you guys, man. Y'all got my back here. It's okay, Zen. If you let me know if you won, then just let me know straight up. Hey, I don't qualify. If you accidentally entered, it's okay. But don't be like, can I still get it, bro? How are we doing at DD band again? Market's got about an hour left, starting at lower band here. Do have, maybe I could try to do one trade here. I still have 2 accounts I haven't touched. Maybe. I have an hour left to hold the same area here. Okay. I'll take one more long here. It's off screen in 2 of my DOMs, just 2. I'm gonna grab it into the other 2 accounts. Okay. All right. You 24 winners. You must send Slacks a message, take a screenshot of your YouTube, and then he'll give you access to the bootcamp. Everyone else, jump in and get in if you want to do it. It's $1 a day for 20 days. And what we do is we watch a video together, and I'm in the class with you, and we discuss it little by little. It's about an hour to hour and a half. It's at market close every day live. The videos are recorded if you can't make it. And you're going to learn the entire process of risk management, volume prediction, which is a whole different layer that you can add to anything you do. Kind of showing some techniques off today. All day we went over one of our techniques. Our strong pivots, which is kind of like everything I was talking about today, we covered one of them. This lower DD band, when only 8% of days close below and 92% of days close above. This is the strong pivot we discussed today, and we briefly discussed this one as well. Under ideal conditions, this one works about 90% of the time. Under non-ideal conditions, it works about 70% of the time. How do we know that? Right? Well, one of our members actually decided to step up and do a back test as well. And again, this person doesn't work for us. This person is just another volunteer of the community. Looks like my trades are taking off. Very good, very good. Grabbing that dip. Let me get something off of that. Let me show you guys the back test results. One of our members put this together, and this was the actual result that we had from the bear market, so we can see if this is even good in a bear market. In a bear market, we actually did a study that shows when you open above hedge pressure, which is this blue weekly gamma exposure level, when you open above hedge pressure here, you actually close above it 68% of the time under all conditions. So under ideal conditions is roughly 80. Under all conditions, which means bear market included, sell-off, crash market, 68% of the time you do not close below this blue line. And the orange line is 73 when you add up the same side open and close rate. Above is 73, below is 73. This was compiled by one of our volunteer lifetime members, Humble Trader. Doesn't work for us, doesn't get paid, nothing. 60% on the downside. So our strong pivots under all conditions, 73, 60, 68%, greater than a coin flip. It's very rock solid setups, and we teach you guys these setups and what they are. So 73, 68, 92, liquidity pocket, which you guys see is my favorite trade, is roughly 9 out of 10 times with all the confluences to go with it. And each of these pivots are all volume prediction pivots. Clearly, you see the volume all day long. If I wanted to long or wanted to short from wherever, I'm taking the bet, at least from here is my pivot to trade off. All right, free lifetime. Ready? You must prove your purchases to our admin of at least 1,000. Okay. Okay. All right. Okay. All right. Okay. I'm sounding like Macklemore there. Okay, you guys ready for this? One more giveaway. We have fun with this one. We do giveaways every day, so you guys make sure y'all come to the stream. Let's do this fun one. No, wait, no, blind monkey, no blind monkey. Hold on. Nope. All right. Free lifetime. Only if you've spent $1,000 using our code, and if you don't qualify and you win, you actually get banned. K Young. So don't lie. We had to ban somebody last time and refund them. K Young, congrats. And if you're like, I don't accidentally qualify, it's cool, I'll spin the wheel again, but don't waste our time. You got a minute, K Young. How do you qualify? Okay, so maybe you don't qualify, right? Okay. All right. Let me say it again. As long as you don't try to claim the prize. Okay, he doesn't qualify. Never mind. Okay, I'm gonna spin it again. You had to have spent $1,000 in May with our code with the partner prop firm on the screen at the top, and that's it. Nawab Crown, have you spent $1,000 using our code? Have you spent $1,000 with our code in May? I'm gonna spin one more time because I don't know if you have. With your code, no? Okay. All right. Only enter if you've used $1,000 with our code in May. Okay. Oh my gosh. I love you guys. I love you guys. Spinning it again. Alan Trades. Alan, with the good luck from helping me with the HTML, wins the prize. Alan can't change the bot though. Please ignore you. All right. All right. Ignoring Alan then. Okay, next spin one more time. All right. Okay, so he said ignore him. He's giving it away to someone else. All right. Not there yet. Okay. All right. K and Red, are you there yet? You guys are going to have to... This is designed to help people that are down on their luck. Down on their luck. They may have a losing month. Heck yeah. So Kyan, do you qualify? Fuck yeah, bro. All right. Congrats. Welcome to the group for life. Hell yeah, dude. All right. Guys, we have our newest family member here for life. Congrats, dude. All right. This is fun. Dude, we have so much fun on the stream, don't we? All right. You need to... All right. You're going to need to do a little bit of work, but it's worth it. Congrats, dude. Go get all your receipts and proof that you use the code and just send it over to Slacks. He'll hook you up. Congrats, man. Lifetime membership sale. Usually Black Friday. So that's kind of when we do it. We have lately sometimes done a surprise lifetime. We did one this last month, but it's rare that we do it. So probably Black Friday. Awesome, dude. Yeah, so usually if you spend a lot, it kind of means you might have taken a lot of losses. Market's kind of shitty. So our goal with the whole reason to do that is to give, give people that may be down on their luck a second chance. You may be disheartened. Maybe trading, you might be like, oh man, trading's so hard. I'm losing all this money. And I kind of want to learn to get better. Well, how are you going to learn to get better if you spend all your money on prop firms? So now this lifetime giveaway is, hey, you might be down on your luck or having a hard month. Congratulations. Here's a free, at least here's free education for you. And so that's the whole reason for me to do that giveaway. We don't have to do anything of the sort, but that's just something we want to give back to people that are down their luck maybe. Do another spin, please. Wait, for what? All right. You spent $700 at the code. Wait, why one more spin? Free Lambo spin? Oh. All right, I can make about $1,000 in each one of these accounts. All right, I closed one out at 878 profit. I got one more, just DD band scalps all day long, man. This has been great. Got one more account to work on. So I closed one out with 878. It's off screen because I can't pop the DOM out. It's in a browser version of Tradeify. One more free bootcamp for an even quarter. You spent 3K using the code. Well, I mean, every month, right? We do this every month, once a month. So it's like if you spend $1,000, you can enter to win. Like only 90 people entered. So next month, we do it every month. It's one of our fun things we do here. Don't you leave on a runner just in case? Well, I have consistency rules on these accounts, so I can only make a certain amount. So right now, I'm just trying to scalp, and this is why I'm talking while we're trading, but I'm kind of also filling the airwaves with, you know, cool stuff while we're waiting. I am almost green in this trade. Oh, I'm green now. Okay, cool. So I've been trading in these two that I haven't touched yet. See, I'm just kind of like cascading my risk. I'm not like going all in. And then these accounts are, one of them I closed at 878 profit. These are funded next. These are Tradeify's. This is my funded futures. That's it. So this one I closed out. This one is still active, 374. So let's see if I can actually finish off making $1,000 with that, and we'll call it a day. So you get, so however much this ended up being today, I don't really, I'm adding it up, but like this went 1826, about 3,000 there, 4,000, 5,000, 57, 6, 63 minus 5. So about $4,500 today. Not bad, just scalping DD bands. Claris, watch the first hour or two of the stream for DD band stuff. AKA banter, but doing the work. Yeah. News close time. Market halts in 53 minutes. Yeah. And I'm going to try to close this one out with close to 1,000. These accounts can only make about $1,000 each. These right here before I go over consistency. So I'm trying to inch forward with these. I'm trying to inch forward with the Tradeify's as well. Limit myself to 1,000 per account is kind of where I got to be each day, because they're all going for payout for consistency. So I can't go blast out like, you know, 5K, 3K wins on them. Am I trading NQ off the ES chart? Yeah, you nailed it. It's called a proxy trade. So they're going to pivot at the same place. S&P is pivoting off the same trade. I'm riding it deep with 2 NASDAQ at the same spot just to kind of get the pivot off of it. Maybe NASDAQ closes above its own band. 92% of days close above. So S&P has a pivot here, and NASDAQ likely closes above. So I'm going to pivot NASDAQ to close above. My target goes from 679 or 80, whatever, to 747, which means maybe I can get the move there before we halt, which should be good. So we'll see. So now my goal is putting the two trades together. S&P has a pivot here. NASDAQ wants to close above there. And therefore I longed NASDAQ at S&P's pivot to bet the NASDAQ gets above here. Roughly a 2.5 to 1 trade. All right, guys. About 1,000K, 1K away from payout in your account. Oh, nice, dude. Nice. I showed P&L hitting max 100K. So for the future, do I have to create a new account to go up even higher? No. So Tradeify has a lifetime. Has a lifetime. What am I saying? A lifetime P&L you can take. And I've already taken like 50K of P&L or 50K of payouts from them. And I also busted some of the accounts along the way. So like the final graph is just what I have still open. And now I'm only inching forward because Tradeify has a lifetime. You can only take 100K lifetime. And usually they'll put you 20K into a live account. You'll cash out the rest when they push you to live. And you get like one live account at 20. Some people have gotten 2 live accounts, like Pat got 2 live accounts. So I'm hoping Brett gives me 2. We'll see. But yeah, it's per user. So you have a lifetime max you can make with Tradeify. What size would I recommend scalping with the 50K account? I would say it depends on what you're... So when you think of questions like that, you have to tell me what the drawdown is, because it doesn't matter what size the account is. It's how much drawdown you get, your total loss limit. That's really what you have to do. Their live is sim. No, their live is real, but once you get past the sim stage, then you go real. 2K drawdown? All right, so ES or NASDAQ? NASDAQ? Okay, so that's basically, so for 40 points in NASDAQ would be 800 bucks. Hold on, wait. So NASDAQ, about one contract maximum. That gives you 2 trades a day at a 40-point drawdown, which is your normal non-volatile oscillating in NASDAQ. 40 points is what you need to do. It's strike distance on Q, which roughly translates to 40 points. It's your standard volatility in NASDAQ. As you see, 680 to 720 is your 40 points. So any position you need to be in, you want it to survive 40 points of chop. 40 points is $800 a contract. With a $2,000 drawdown, that roughly gives you 2.5 trades a day with 1 NASDAQ total. If you go any higher than 1, you'll only get maybe 1 trade a day before you stop out. I like to follow a 3 days to blow up at 2 trades a day. So with the 1 contract on NASDAQ, up and down $800 of chop gives you 2.5 trades. That's how I would trade that. The daily bias in NASDAQ? Come to the stream, man. We're almost at the end here. Liquidity map is what gives me my bias. It's a map that shows the flow and direction based on options. And liquidity map draws the arrow. Just like the song said, liquidity map shows the way. High volume pivots and flow direction based on gamma exposure. And the map shows me which direction and where I long and short from. You get to watch that on the stream. I'm an OBS hard-hitting auditor and don't pull punches of sugarcoat. Vouch fully for the system. Thank you, John, man. John could have been like the biggest critic of the world, because John and his buddies, like, shit, well, we've known each other almost like 10 years, dude. John runs with a crew of people who are like highly skeptical and highly technical folks. They are like some of the smartest, most assholey, most hateful people I've met, and fucking brilliant. And John could have been like my biggest hater in the world. I promise. When I knew the people he ran with, I was like, I'm scared of these guys. They hate everything, and they're hypercritical of them. They're very smart guys. And so the fact that you guys really kind of like gave it an honest look and were very supportive, it meant a lot. You know, I was like, hey, these guys are tough. I don't know if you still talk to any like the old dudes from the old days, but I'm very understanding of all the stuff that goes on under the hood in the market. I'm very understanding of options and how it all works. Yeah, so we have our own model. When the market opens tomorrow, just be here tomorrow in the stream, you guys. It'll be a big experience for y'all, for sure. You still talk to all of them? Dude, I haven't heard from like what's Richard and all those guys in a while. But they're good. Trying to profit off of trading. Any tips? You guys still hustling. You gotta keep working on it, man. You know, trading is not a... Like, it took me 5 years, I would say, about 5 years where I considered myself capable of doing it full time. 5 years before I trusted my livelihood to trading. If you're not getting it done in the first month, 2 months, 6 months, years, if you guys think I'm good or don't think I'm good, whatever you think, if you think I'm good and you're like, I like watching Matt because he's good, you could say, well, even Matt took like 5 years to really get a hang of this, right? It means don't give up. It's not it wasn't the easiest path for me. I had a lot of struggles early on because I was just terrible at betting and had an ego. It was an emotional journey. It was a betting strategy journey. It took me a while to discover the real mechanism being profitable is really the betting size you do, how big you're betting. And then once I started doing volume prediction, I was just betting the right place. And then I had both of those together turn profitable for me. 5 years was my journey. You think we'll close the gap because stocks weren't traded today? No. I think the market's selling off because the Fed dot plots show that the Fed is completely abandoning their desire to cut rates for next year. And we might not even get a rate cut this year if things progress to get worse. That's what the dot plot shows you. So Wall Street is not liking the idea that the Fed is probably not going to cut rates this year. Or is trending towards the idea. We may get 1 to 2 rate cuts. The dot plot still says the majority of the members are voting for at least 1 rate cut. Some of them 2. But a growing population of a lot of them are saying none. And that's where the alarm has come from. This is last dot plot versus this dot plot. There are 3 more people that have jumped ship to the no more rate cut. This is where we are now, 4.25, 4.5. And so the new dot plot shows fewer people believe we should have a cut. So essentially what it looks like is 2 of the people that thought we get 1 rate cut have moved to the camp of no rate cuts anymore because of the tariffs. And then the bigger problem is that the majority of the people that thought we got a full basis point or 3 to 4 cuts over the next 2 years, the majority of these people have moved up as well to this camp. So a lot of people think that we get 2 rate cuts total over the last 2 years, which is from 4.5 to 4, 2, maybe 3. As opposed to a quarter ago, where a lot of people thought we got 3, maybe 4, maybe more. You guys see how the market is sort of like if you compare the right side to the left side, it's looking like this instead of like this. Most of the participants think a higher rate is better. So getting 1 to 2 fewer rate cuts over the next 2 years is why we're selling off. The Wall Street has been very, sensitive to the Fed, especially since we're in QT right now. And that's really why we're selling off. So I don't think we, not 5 years with my system, 5 years trading in general. In 2015, I took the plunge to do this full time. I developed everything in Rocket Scooter between 2016 and 2020, like the futures side. And then I developed the liquidity maps roughly around 2019, 2020-ish. And so before, when I quit my job and started trading full time, I was rocking, probably 40 to 50% win rate. When I created Rocket Scooter and all the tools that come with it, I guess I trade 70, 80% now. I'm very particular, and I'm a whole lot better now than I was then. Now I haven't had a losing trading month in years. So back then I was enough to get by and pay bills. Now I'm in the period of my trading career which is known as abundance. I don't really lose. And this is 15 years in the game. I lose. I have losing days. I blow up accounts just like anyone else, or prop accounts. I don't blow up my real account. My real trading account has not been blown up, and I can't count how many years. I can remember the last time I blew up a real trading account. And if you're looking for a target, that's 15 years into the game that I can say that. So. It takes a long time to get there. So the 5-year learning curve, having a mentor may shorten. Yeah, I think that can. And telling you guys, in 2010, there were no mentors. There was no YouTube. There weren't even micro futures. Back then, there was nothing. Everyone I knew was trading penny stocks. Like, nobody touched futures. There weren't prop firms that were big. None of this was available. And these guys, you guys in this day and age have a lot more resources, available to you, but also it's a double-edged sword because there's a lot more crap being sold out there. I tell people education should be cheap and available. We have a cheap and available one. The desire to help traders is often overshadowed by the desire of gurus to make money. So be careful what you guys absorb out there, and I'll always help you guys out too. If there's something that you're like, I want to learn this, what's it really about? Somebody else is trying to sell you something or whatever. pitch it to our community, pitch it to me, pitch it to our folks and say, like, what do you guys really think about it? We're always very honest to you about what's out there in the world, especially if you can find something for free and learn it for free. Always better than paying somebody for it. What is 10 ticks to points equivalent? It depends on what contract you're talking about. A tick is just a denomination of a contract's like discrete trading prices. NASDAQ goes up in 1/4 of a point. Right? You can see 50, 70, 25. S&P goes up 1/4 of a point. So 40 ticks is 10 points in S&P, 4 ticks is a point. NASDAQ, four ticks is a point. I long more than I don't, because the market tends to go up more days than it doesn't. And there's more bull opportunities and bear opportunities. I only short in bear markets when I have bear confluence, and we're just selling off in a bull market still. All my trades this morning have been long. The market's been selling off, and I'm about to cap my final trade here and close out as soon as we get this nice little bump here. Like I said, I'm about 6-7 grand up, just longing in this market, just longing my pivots. Well, this account can only make roughly about $1,000, just the same as the other, and I just closed it out, and we're good. Perfect. All right, now I'm done for the day. One of my accounts hit max daily loss limit, which is okay, but now I'm done, and now I'm closed. Only longs, only scalps, only high volume pivots, mostly just DD band scalps, and there I am for the day. That's it. You guys got to watch all those trades live. Pretty cool. The final one here I closed out just now, and we're done. These are 4 funded next accounts, 5 Tradify accounts, and 1 live funded my funded futures account with the grand total of 953 plus. Anyway, they can only make about 1,000 each for consistency, so I can't make any more than that. I'm just kind of driving the boat to payout now. I've already capped out with all my peak buffer with Tradify. Oh, actually, I could have gotten more than the 394s in those accounts. All right, I'm not paying attention to that. Whatever. $57.71 profit. Not bad. Even when the stock market's closed. Not bad for morning's work. These are all funded accounts, by the way. So, good deal. Bootcamp is recorded, yes. You guys have more questions for me? I'm not reading some of you guys have said. How much is my profit just today? $5,700. Easy peasy. Market, the market halts in 40 minutes. Boot camps are recorded, yeah. Valtess is saying, I don't have a bias on this one. I'm just having levels that I adhere to. That said, I mentioned the market in general wants to go up. Right, so I'm trading off of levels. Just because I know there's volume at these levels, I'm going to take a bet that I'll have volume at those levels, basically. And I'm going to take a bet that that's where the market holds, because statistically, it closes above 92% of days. It'd be very rare for the market to break and crash out with the stock market close, even though we are selling off pretty hard, because Fed kind of delivered like a gut punch to the market yesterday. Matt is your mentor. Oh, yeah. Oh, yeah. Yeah, I didn't have mentors back in the day. I kind of had to carve my own way, which is another reason why it took so long. You know, I had to create my own stuff. I read any of Jim Dalton's books. I haven't. I don't read a lot of trading books, to be honest. Am I predicting the market closes above? This is close at the Globex close. So the market is not closing right now. We're just halting. The percent includes all of the day. So last night's trading, this morning's trading is actually all Friday because today's a market holiday. So the percent actually includes tonight's trading and tomorrow morning's trading as well, all lumped up into one day. So I'm just betting that we're not going to crash out into the halt, basically. Yep. What indicators do I use, Summer? I'm using Rocket Scooter's suite of volume prediction tools. How much should you start trading with as a noob? I can't answer that question because that's the best financial advice that I can't give you. As a noob, if you want to start trading, try prop firms. It's the cheapest way to go to get your feet wet without wasting your money. Yeah. So Voltessa is saying it's all data-based. Correct, right? You need things to line up and then I take a trade. Can please explain funded if you fail the account and which is better to reset or get a new account? Just do whichever is cheaper, Abu. Normally resetting with a lot of firms is the same price as buying the account outright. Other times, like if they have a sale, it's cheaper just to delete the account and start over. Like with Apex is having a 90% off sale or something, then sometimes it's better just to delete and grab a new one. Summer says paid or free. It's all paid in part of this platform. Or you guys can watch the stream if you want it for free. So how many times is the chance it'll be an uptrend? You can't predict the direction of the market. The prediction that we make is 92% of days close above, which is based on a back test. It doesn't mean that it rallies or doesn't rally. It just means it closes above, which can mean there, it can mean there, it can be there, it can be there. So the idea is I just bet that it doesn't close below, but you can't predict a rally with any trading system. So I'm betting on a kind of like not go principle. It's unlikely that we're down here. I'm betting that we don't go here, and I'm betting that we end up somewhere up here based on the evidence I have to line up other don't go tools to tell me it's likely to be here rather than there. But you cannot predict, as the whole point of this class was to teach you, you can't predict the stock market at all. You can't predict the rally. You can't predict the sell-off. You can't predict the stock market. You can't. Nobody can. You have to unwrap your head, that vice around your head that something is going to predict the stock market, that some mechanism out there can read and predict this thing. I've done it for 15 years. I'm a fucking multi-millionaire trader. You can't predict the stock market. And I didn't become a millionaire trader, multi-millionaire trader by being able to predict the stock market. I did by being able to control the size of my bet and randomly betting in this market in only places where I can actually find out where traders will be. Other than that, it's still a coin flip everywhere we go with odds. That's it. So can it predict that there's a rally? These kind of questions are dumb. No offense. They're naive. That mentality is probably why it took me 5 years to finally figure out how to do this full time and make money. You can't predict much. But what we do is have odds that something doesn't happen. And that's good enough for me to line up a bet from a volume pivot to another volume pivot with a stop loss of a certain amount. And if I can produce two volume pivots nearby with the probability something doesn't happen with the stop down here in case it does, then I can set up roughly a 2-to-1 trade. And then I can say, I'm betting that the random market just goes to next pivot this way rather than here because the odds are good that it doesn't sell off. And the mentality that you have is that the odds are just odds, and reality is no one can predict. Are we going to rally? Are we going to sell off? Are we just going to hover? Are we going to bounce around? It's random. And the idea is I understand that that's random. So the probability is high that it doesn't sell off. I just take the bet that it doesn't sell off. S&P has a pivot here. NASDAQ has a pivot here in the same light. So NASDAQ has a high volume pivot where high volume is where buyers and sellers are. Market price goes up looking for sellers. So this is all no man's land, but I bet you if we touch this line like we did the previous times, there's the sellers, right? So I can say, well, okay, nice. We have a 679 to 749, right? That's 60 points of move. If I put just a 40-point stop under that, then I have a pivot to pivot of a 60 to 40, which makes it a 1.5 to 1 setup. And then I can either get the run or get the loss. And trading is really that. It's trying to find opportunities from pivot to pivot and then making sure your R&R is worth the trade. How many more millions would I have lost or won if I would have held longer than 0 DTE? You mean like swing trading? I'm going to say education and trading is expensive. I didn't have prop firms when I came up through the ranks. I definitely took a multi six-figure education expense in the markets early on. Imagine, wait, Chris, you're saying something about a prop firm you've mentioned a couple times. Do you work for them? Are you like an affiliate for them or something? You've mentioned it twice. This is the 4th time Halcyon Trader Funding has injected their shit into my feed, into my chat, into my Twitter. Not only am I never going to promote this, I'm going to make sure that your firm doesn't get promoted by fucking anybody I know. I think your guerrilla marketing is bullshit and get the fuck out of here. You guys have invaded my DMs, invaded my comments. Don't be doing that stuff. I literally, I made a promotion post with one of my partners and they posted underneath it. That's stupid. Like, you know, here's what I tell these prop firm people. Let me explain. This is what it is. They would like, you know, check out our firm. Hey, promote. Hey, help. People, they show up in my chat and do this stuff. These prop firms out there walk up to traders like me and make us 6-figure a month offers. 6 figures a month just to talk about their firm. So if any firm comes in cheap and is like, hey, promote our firm, I'll make you an affiliate. They don't got the money to pay you. They don't got the money to pay you guys out. So if these guys aren't coming up to me, offering me, you know, 50K, 100K a month to talk about their firm on my stream, which they do. I get offers like that on a weekly basis. You got to know they don't got the money to pay out their traders. Don't use them. That's a red flag if there ever was one. It's okay, man. You're cool. I would look at real world options for you. Yeah, you're all right, dude. I'm just saying, I have a particular distaste for that firm because they kind of do that. They inject their stuff into my comments, into my feeds. I post about Tradeify. They show up underneath it and post it. I've had to block them on Twitter. A good, honest, healthy firm will walk up to a popular marketer and offer them a substantial amount of money because they're healthy. Right? That's your red flag. So, okay. If you're not trying to promote, you're good. You're good. You're good, brother. Don't worry about it. So check out them. No consistency rules, no daily loss. Only rule, don't go below drawdown. You can only imagine an account that only made X amount of money. Yeah, no, they make the same sales pitch, dude. Like, it sounds just like a sales pitch. No, it is a sales pitch. Like, you wouldn't, like, I'm very good at analyzing language you're pitching. I can only imagine an account that made X amount of money. You're offering the value prop of that firm. You have financial incentive in it. Do not lie to me. Come on. You would just educate us onto the pros of that. You wouldn't be offering their main value prop sales pitch. I've heard it all day long with that firm. Come on. Well, I'm going to let you guys know that I'm never going to promote them. I'm actually going to promote against them. I don't know. Because I don't believe that they're healthy. I can just tell. But they sound like they have awesome rules, but it may not be sustainable. I don't think they'll be able to sustain themselves. And in my partnerships, I'm very strict about who I work with. But yeah. No, I'm not going to promote them, no. Which prop firm is your favorite? I'd say that they're all the ones that on my list here are really good. My favorite, it would say that the one I use the most is Tradeify straight to funded. I like that one a lot. ETF has a straight to funded program, and Funded Next just is releasing a straight to funded program. So 3 of the ones I work with have straight to funded, which are awesome. End of the day drawdown, 100% my funded futures is the best of the best of that kind of account. The Expert is really good. Apex is like kind of like my least favorite. But everyone still uses it, but most people use Apex and now switched over to Take Profit. It's a better version of Apex. And those are my favorites here. So if you like the trailing drawdown, Take Profit's the way to go. Apex is like the runner-up. End of the day drawdown, my funded futures. There's no better second place on my list. Static account, Elite Trader Funding is pretty good. And then direct to funded, just to repeat, Tradeify, Funded Next, and ETF for direct to funded. It just depends on which type of account you like to trade. I like the direct to funded because it's a faster path to payout, but it's also more expensive. If you want the easiest trading account to get, you get ETF's static account or My Funded Futures Expert end of the day drawdown account. Both have their pros and cons, but those are the easier accounts to pass of any accounts out there. My Funded Futures Expert is probably the easiest account to pass and get payout with of all accounts in all prop firms, period. Because there's no consistency rules on both funded and eval side, and there's no daily loss limit. It's pretty much the quickest path to payout as far as getting to stat. They also have a 15-day payout window because it's easier to get to payout. It's up to you. Have I heard of Top Step? Yeah, but I don't support Top Step, so I have other qualms with Top Step, but they are a good firm. Top Step is one of the bigs as well. I just don't promote them. Top Step and My Funded Futures are probably both near the top as far as the quality goes in the end of the day drawdown. Top Step has a 50% consistency on the eval side. My Funded Futures doesn't, so that's why My Funded Futures is slightly better. Like I said, both of them are S tier, but My Funded Futures is like 2 feet ahead of them in the race as far as the quality you get for the value of what you pay for. Now, My Funded Futures does have like caps and stuff on payouts. Top Step, they're different for different reasons, but it's hard to say like if you're looking for the easiest path to payout, MFF is slightly easier. Yeah, I've never used Bullendock, so I don't know. MFF has 50% consistency on the starter plus, yeah, but not on the expert. Top Step customer service blows. Oh, okay. The new funding ticks, what's your thoughts? I know Pat is promoting them pretty heavily. Funding Pips is like the biggest or one of the biggest prop firms in Forex. Now let's talk about the difference. So the big Forex firms are coming over to futures, right? And they're all kind of aligning with big promoters out there. The Funded Pips, Pat's in that camp. The Funded Next, I'm in that camp. So we're kind of all forced to pick sides on who we partner with. And Funded Pips, I've heard very good things about, just like Funded Next, I've heard very good things about. And they're all trying to make a splash in futures. I don't know anything about them, though. But I do know that Pat turns down ridiculous offers on a daily basis like I do. And he won't work with anybody because he won't risk the brand name. So I'm assuming the fact that Pat's working with them, he's done his due diligence. And that's what you got to assume. Pat's a pretty smart guy, so I would say if there was any risk to his brand, he wouldn't be partnering with them. So it's probably a safe play. But I don't know anything about what they offer, so yeah. What's the difference between Forex and CFDs? Forex is trading currency pairs, and CFDs is trading contracts for difference, which is just like bucket shop trading of relative products that track like things like S&P and NASDAQ and stuff. MFFU is the only one with ACA compliance. I don't know anything about that. Not sure. Do I copy trade? I don't copy trade. I'm one of the few traders that doesn't do that. But I'm also one of the traders that performs very well in this light. I don't blow up a lot. I don't blow up like all my accounts in one go. People like cycle through like thousands of Apex accounts, blowing them all up at once. At worst, you see on my screen, one of my accounts went red, the other 9 accounts went green. Don't copy trade. What's up, Sam? What's up, dude? Pat is in Wheelan. Yeah, Pat Wheelan. So he's partnering with the funded pips guys, and I'm partnering with the funded next guys. So in that sense, we're both like competitors in the big Forex world. But I have nothing bad to say about funded pips or funded ticks. I don't know anything about it, but I've heard good things. Do I get any discount on my funded futures? Yeah, use Rocket Scooter code. We always get whatever their best sale is at any given time. And right now there's a buy one, get one kind of sale. If you buy any account with my funded futures right now and you pass and go funded, they give you a second eval account for free. So this is a new promotion. The code Rocket Scooter will get you that. And they're doing that right now. If they don't have any promotion going off, we get an additional 5% off when they don't have a sale. So being that I work for them, I get the premier deals with those guys. So my code works for their premier deals as well. Is there a video on your strategy explaining your strategy and pivot levels? There's a bunch of them. And this one will be promoted at the front of the channel too, today's. What's happening on the US 500 right now? The stock market is closed today. So the US 500 is just trading lower because futures are pricing in lower stock opening because the Federal Reserve yesterday dropped the bombshell in the market and that there are fewer chances of rate cuts this year or next year. So we're just trading lower. So, Mema, the closing is not now. The closing is going to be tomorrow at 5 p.m. The probability does not include this portion of Friday's trading day. This is Friday today because it's a market holiday. Last night, which was Wednesday night, and Thursday morning, and Thursday night, and Friday's session are all considered Friday according to futures. So this probability is not including this small portion of Thursday morning. So there's no 92% we close above now before noon. That's not part of the probability. It said we close above here, probable by close tomorrow. Yeah. So it's just, we count the number of days that close above the band and the number of days that close below the band. And that's it. And holidays are all considered Friday right now. So yeah, so right, it's not like let me long because I bet we rally into the last 18 minutes of trading before we halt. Not the case. Yeah. See you, Cyril. Awesome. Thanks for coming to the stream, man. Top one trader, you can use Trade Locker as a platform. That I'm not sure, but I'm going to tell you, I would avoid Top One Trader with every ounce of my being. I wish I could jump in front of your moving car and stop you from driving. They are a sinking ship. There's a very high probability that you don't get a payout. And there's a very even higher probability that they maybe go under at some point. Be careful with Top One. There's a reason people call it Timu One. There's all kind of memes about it. They are known for changing their rules rapidly and forcing you to absorb it and telling you, fuck you, get a refund if you don't like it. They're known for having shady influencers promote them very aggressively to get hype. They're known for banning people from Discord when they ask questions or complain about payouts. They banned Brett Simba from trading with them because Brett Simba was making fun of their straight to funded program and also calling them out basically that it was not sustainable, that they were changing their rules, which is informing the public of something that's true. They banned him from trading after using his name to publish or for publicity for their own brand. So with a platform that's silencing their customers and silencing their opposition, I'd be very careful going anywhere close to top one. They've shown so many red flags so quick. I'm one of the handful of people that are advocating against using them because it's a fast track trading that you can see coming from a mile away. It's completely unsustainable, and their risk department is almost non-existent because you wouldn't be changing your rules so rapidly, so intensely, and making them retroactive unless you were close to insolvency, which means their rules are so lax to get people in the door that they almost went under. They couldn't afford their payouts. They said one post they made like 80% of their money went to payouts. They didn't have enough to buffer any potential volatility or change the market. So there's a reason all the bigs are kind of warning against that. Yeah. I get paid nothing to promote against them. Nothing. This is my honest opinion. And again, like I'm saying, Tradeify is a directive funded, ETF is directive funded, and FundedX is soon to have one. So far, none of those firms are getting heat online for denying payouts en masse or banning people from Discord en masse and things like that. But you can go in Twitter and just ask people. There's a lot of people kind of, you know, I was an affiliate for them for a hot minute because they offer, you know, me to work with them. I took a code, and after they banned Brett, I asked them to remove me from their database, and I canceled my account, deleted my account, and they said delete my code so no one uses it. And then ever since then, I was like, let me give them some time and give them a second chance. And since I did that, they've had 2 sweeping rule changes yet again, applying retroactively to all their customers. It's more like, hey, you've done all this work, you've made all this money, but sorry, we're changing the rules on you, and you don't get your payout now. Like, well, I put in a month of work. And, well, you can get a refund if you don't like that. And I feel like it's very bad rep. Tyler, if he was in here, he'll tell you that he personally has a horrible experience with that firm too. Bro, you went and bought the dill, the Miss Vicky's spicy dill. They're the shit. Dude, they're like the best chips, right? The spicy dill pickle Miss Vicky's. I got to show you guys. Okay, tomorrow I'll bring up that secret stash I got of the defected ones that have 10 times the seasoning on them. Oh, dude, they're so good. Top 5 prop firms in order from best to last. It's hard to compare them because they all offer different products. Okay, so I kind of have them up here in no particular order. Directive funded, Tradeify on top, ETF is second place. There's not many that have directive funded. Static, ETF on top, Apex probably second place. There's not many statics out there. End of the day, drawdown. My funded futures at top. Funded next, second. Tradeify third. The trailing drawdown type account, take profit at the top. Apex in second place. Overall quality in general for, I would say, perception, everything, payouts, integrity, no shenanigans, Tradeify reigns supreme of all the partners. Tradeify has only denied 2 payouts in the history of the company. That's it for account sharing. So with that being said, Tradeify, and in a close second place, my funded futures. Customer service and Apex is shit, so they're at the bottom. Take profit is second to shit. They're second from the bottom. But that's on a list of the 6 best. They're all S tier. So we're comparing, like, you know, a great product to a great product, you know, Nike versus Adidas. They're both fucking awesome. Okay. So all of these are great. So I would say I'd rank overall Tradeify, my funded futures, ETF, funded next, take profit, and Apex in that order. And the reason that the discrepancies at the end is because the customer service is slower and kind of harder to get around in the bottom ones. And Apex at the bottom of the list because Apex is applying sweeping rule changes that I don't like either. Again, all of these are S tier, so we're not talking like A, B, C, D, and F ranked firms. These are all A+, 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 just a slightly lesser A+. Everyone not on this list, I don't think is S tier. So, best broker for a live account, it's up to you to decide. They're all pretty much the same. The reason most people in Rocket Scooter will use AMP is because AMP has the cheapest minimum deposit. Other than that, they're all pretty much the same. Trading Trade Day or Blue Sky, I've never traded those two. Class tonight. Oh, because the holiday shit. Okay, no, we'll have to do it tomorrow, guys. The Trader Funding Masterclass we'll do tomorrow. Quality goes, my funded futures and Tradeify both have stellar like dashboards to trade on. Good information. They give you all your stats. It's well presented, right? And not on my list of partners. I have to give an honorable mention to Top Step because they're also S tier. They're just not one of our partners, and I don't like Top Step's behind the scenes maneuvering to try to create regulatory organizations and stuff. So I kind of not support them. But other than that, Top Step is S plus tier as well. It deserves to be on the list. I just don't. I wouldn't put Apex S tier. No, Apex is falling off quickly. I'm going to tell you, Apex is at the bottom of the list of all the ones we work with. And it's soon to fall off. The only reason I still use them is because you guys still use them. But I recommend that most people that use Apex to use Take Profit. It's a better version, a much better version. Yeah. I don't trade with Apex anymore. Top Step and My Funded Futures is some of the only ones you can trust. Yeah. I'm going to tell you, they're great peeps at both of those places. Just, Top Step is trying to become like the Apple of prop firms, and I don't like it. They're trying to create their own regulatory rules to force other prop firms, their competitors, to follow certain rules, or they're going to kick them off of Top Step X platform kind of thing. I'm not into that. I'm not in the whole monopoly sort of thing. So until then, I don't really support them. But if you use Top Step, you're going to have a great time. I also use Top Step as a trader. I just don't try to recommend new traders to them. But in general, they're good. They're nothing bad I can say about the whole program there. Top Step is the OG GOAT, and they've always been good. They treat me good. Thoughts on Paddock? Yeah, he's a good guy. I don't agree with some of his rules though, and some of his maneuvering. I think he's kind of taking prop firms in the wrong direction. I think by trying to regulate and prevent. He's trying to basically protect his own interests by preventing people from longing in one firm and shorting in another firm, sort of thing. But that's kind of like the casinos banding together to. You know, if you get caught cheating over here, and it's not really cheating because you're not cheating, you're using what's available to you. Counting cards, it's up to you to debate if you consider that cheating or not. It's all fairness. It's an advantage over the house. And they're trying to take additional steps to share customer data with their partners and competitors, with their competitors, to prevent like card counters from gaining an advantage over the house. But they're not really cheating or breaking the law. It's up to you to decide if you think that's cool or not. TBT is intraday when you go pro. That's correct. It's trailing drawdown intraday when you go pro and funded. It's not when you aren't. Unlike Apex, which is trailing the whole way through. So most Apex traders are moving to take profit because it's easier to get funded and you get paid out every day. They have daily payouts to take profit. And it's amazing. How about funded futures first? Never heard of them. What happened to Earn the Trade? I think they're still around. I'm good friends with one of the original creators of Earn to Trade. We chat all the time about prop firms. He's not involved with them anymore, but they're one of the OGs, one of the first ones around, and I think they're still around. You just don't hear a lot about them. I'm sure they're still around. But they were one of the OGs in the prop space. I think Earn the Trade came around before Top Step did. MFF when passed, you get free eval. Only valid if you buy Starter Plus or Expert. I think so. You don't, but even though with My Funded Futures, don't ever trade the starter. Pay a little bit more and always get the Starter Plus. To remove one layer of consistency for like another $30, absolutely worth it. Imagine the consistency rule forces you to trade longer and you blow up and you got to rebuy the account. Always, always, always go Starter Plus. The price is such a small difference for such a big gain, right? Yeah. Right, it does. And if you go to Expert, you have no consistency in both funded or eval and no daily loss limit, right? So Expert gets rid of the daily loss limit as well. The only downside with TPT is 80-20 split. Right. Every firm that's good will also have like a rule that's not good, right? 10-to-1 scaling and starter. That is also true. Yeah. It just becomes harder because of the consistency in both places. But up to you. Yeah, so each account has its own flavor depending on what you like. There's not really a bad account at My Funded Futures. They're all good. Yeah, no DLL and Starter Plus either. That's correct, right? So I'm sorry if I said expert. I mean Starter Plus. They don't have the DLL. They just have the consistency. Starter has consistency in both. Starter Plus has consistency in one and no DLL. Expert has consistency in neither and no DLL. TPT is good. Yeah, TPT is probably everyone here's most used prop. Of all the ones on the list, you guys use Take Profit more than any other firm. I'm not gonna lie. Take Profit has my biggest affiliate check. By a factor of 2. By far, it's the biggest one used here. Probably because most people left Apex to go trade at Take Profit. Carlo? Yeah, so we might have another lifetime sale. Sometimes you do that and lifetime becomes $2,500 for the platform just to outright purchase and just catch the next sale. You know, it could be that. We usually do it every Black Friday. Lately, our community has gotten so big. We've grown so fast. We've been doing it. We did it twice since Black Friday. So maybe like once a quarter, maybe the company will decide to host another lifetime sale before Black Friday. But definitely on Black Friday, we always have it. When Take Profit ditched DLL, they exploded. Absolutely. 100%. All right, guys, market halts in 4 minutes. Don't forget to sub to the channel. We love that you guys came out today. This is the biggest stream we've ever had view-wise, which is kind of cool. We almost had 1,000 people. We had 993 people today. That's incredible. Nope, 997. Wow. Like I said, we get to 1,000 viewers every day. I'll go out there and buy some more funded accounts. We gave away 2 Tradeify straight to funded, 1 lifetime, 24 boot camps. That's great. Excited about that. And don't forget to like the stream on the way out. And thanks for tuning in, guys. I'll be live tomorrow morning, 8:30, an hour pre-market. I stream all the way until 12:30. I go live with My Funded Futures TV for about an hour. And then after that, we usually stream in the afternoons. Have a great day today. Managed to pull out $5,700 profit just trading all of this on stream. DD Band scalps, kind of cool thing. Market was selling off all day. I managed to only hit drawdown loss in one of the accounts, which kind of sucks because it was my Funded Live account. The most important one of all of them is the one that took the hit. $1,500 DLL on that. Damn you, NASDAQ. But that's okay. It happens. Anyways, you guys, my name is Matt. Thanks for coming to this cool lesson. I love teaching everything we do, and we do this for free every day. So come over anytime, and we'll see y'all tomorrow. See ya.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray. Liquidity map paints the scene. Hidden nodes like ghosts unseen. Reverse engineer to see the light. Illuminate the darkest night. Rocket scooter has got the key. Pull back curtains, let me see where institutions hide. Doubt can't live. Institutions we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads, no fear. No more guesswork, no more loss. Seeing paths the others cross. Institutions will be seen.